So we're working in Zambia. We're in the heart of the Zambia-Congo copper belt in an area called the Domes. So the Domes would be arguably the top spot on the planet right now for copper discovery. It actually has the largest geochem anomaly ever discovered in Zambia. So that's what we're about to go and drill. The initial intercepts were 21 meters of 10.69% copper. That is acid-soluble copper from surface with zero strip. 26 meters of 5.6, 15 of 3, 7 of 4.6, super high grade. This is free mining. This is stuff that is at surface with zero strip. They're going to scoop it up with an excavator. It's already broken up. They'll load it into a dump truck and take it straight to the SXEW circuit. There's zero processing. To me, it's as easy as a jurisdiction gets, and I see worse things going on in British Columbia, where I live, and in Canada than I do in Zambia. So it seems to be a very safe and stable place, and I think the future for Zambia looks great, which is why you're seeing all of these companies come in such a big way right now.
This whole copper belt is just this sort of copper Shangri-La.
This target's spectacular. Everybody zeroed in on it for the same reasons. The analog to Lumwana is striking, and you're getting that straight from the horse's mouth. Kevin's the guy with his team that unraveled it. So he sees the same stuff that got him excited over there. But this is going to be unreal.
Plants can't grow there. That's how high the copper is in the soil over Dunbar.
Interesting.
It is. I fell off my chair when I plotted this. I thought that was just amazing.
Each of these is a company maker target. These are big, spectacular targets that can be dome-style deposits. And then you still have the oxide aspect on top of that.
Okay, so we've got Adrian O'Brien here with Midnight Sun. And what he's going to do is he's going to give us as succinct as possible 10-minute pitch on the company and where it's at. And then the bulk of this should come from you guys and hearing what you think of the company, the resource, what problems they might run into. I mean, the best learning I think will come from ultimately hearing what you guys have to say about it. So hopefully we'll have a spirited conversation after Adrian does his pitch for the company. So go ahead, Adrian. All right, Adrian, I think you're good to go. You should be able to share your screen.
Okay, perfect. Let's put the deck up here and we'll go through. So nice to see a few familiar faces on here. Couple of you have heard this story, and maybe a lot of you haven't. I'm guessing a lot of you have not. So what I'll do is we talked about this beforehand. We're going to try and keep this to around, give or take, around 10 minutes. This is a lot to cover in 10 minutes. This story has a lot of nuance and two really big components. So I'm going to hammer through. I'll tell you the story, and then, as Matt said, let's dig in on the question side and try and get through every ounce of detail that we need to here. So before I dive into the graphics in this, I want to set the stage a little bit for you and just explain where we are. So we're working in Zambia. We're in the heart of the Zambia-Congo copper belt in an area called the Domes. So the Domes would be arguably the top spot on the planet right now for copper discovery. There's a few different reasons for that, which I'll cover in a minute. But we basically have a 500 square kilometer land package. We've been here for over 10 years. And if you throw a 100-kilometer net over our property, you're going to capture First Quantum, Barrick, Rio Tinto, BHP, Anglo, Cobalt. The only company I can think of that's not there is Glencore. Everybody is here. Everybody's focused. Ivanhoe just announced a new deal with the Zambian government. They're coming in, actually getting detail and geological ideas from the Zambian government to move into the district in a big way. But it's a super exciting region. We have two really distinct components to our project. So we have 4 very large sulfide targets. And then we also have a deal in place with First Quantum for oxide copper across our property. So we have near or at surface copper mineralization that we're aiming with First Quantum to get into production within 12 months. So we just announced the first drill results from that. They were absolutely spectacular. Gives you an idea of the grade tenor we're going to be dealing with on those projects. And super exciting. But let's knock one other big thing out of the air here. For anybody that's not familiar with Zambia, very, very favorable mining jurisdiction. 75% of their export earnings are copper. Democratically elected government, proper mining act in place. Put simply, there's a reason why all of those majors I listed are here. This is an easy jurisdiction. So I always like to say, at the end of the day, this is a jurisdiction where if you find it, you're going to be able to build it. And these are all stratabound copper deposits. They're all shallow, they're large, and they're relatively high grade. So this is an area where you really have a chance of doing that. If you want to build a mine, you find a deposit, you're going to be able to do it. So this graphic tells the story. What you see on the right-hand side of the graphic is the traditional Zambia-Congo copper belt. There's dozens of big deposits there, a number of big operating mines, but the area with all the bubbles you see there is called the Domes region. That's where we're centered, and that is, over the last 20 years, has developed into the top part of Zambia and one of the top spots on the planet. The reasons are really simple. What you're looking at on your screen is the 5 biggest operating mines between Zambia and the DRC within the Domes region. Everything represented on your screen, with exception of Tenke, is 1 billion tons. These projects are absolutely massive. This is an area that breeds billion-ton deposits, and the average grade in Zambia is about 0.59%. So they're relatively high grade, they're shallow, and they're very large. So you build your tonnage on strike. What you're looking at here on the west is First Quantum Sentinel Mine. It's 1 billion tons at 0.51. Barrick's Lumwana Mine, which is 1 billion tons at 0.55. That is soon to be double the size and double the output, thanks to the new super pit they're developing. They've got an $80 million feasibility study underway right now, and that discovery was made 4 years ago by our Chief Operating Officer, Kevin Bonnell. So I'll give you a little more color on that in a moment. Of course, Kamoa-Kakula, I'm sure you're all familiar with that one, 1.4 billion tons at 3%. Sits about 70 kilometers north of us inside the DRC border. And then right next door to us, a critical part of our story is First Quantum's Kansanshi mine. So that's 1 billion tons at 0.66. It's 6 kilometers away from us, and their haul road runs through the center of our property. So that's why we're working with First Quantum, but I'm going to give you a lot more color on that in a second. So if you look at the Zambia side of the border, here we are now zoomed in. We're excluding the 2 that sit inside the DRC. This is Midnight Sun's property. So this is broken into 4 very distinct targets, and there's a clear reason why. If you look at the 3 mines that surround us in Zambia, you've got Kansanshi, Lumwana, and Sentinel. They're all centered around a basement dome, and these basement domes are what dictate where the strata-bound copper deposits are forming. 80% of the deposits in this region are formed in one particular unit of rocks that surrounds these basement domes, referred to as the lower round. So when you're looking at these, there's a specific reason why each of these deposits is typically centered around a single dome. Under our property, we have 3 separate domes. So those domes have actually created 4 completely unique geological systems on our property, and each of those has at least a drill discovery saying that there is a sulfide system there. And these sulfide systems tend to be around 500,000 to 1 billion tons if you're lucky enough to find one. So we have drill discoveries on 3 of the 4 targets. We're working on Kaziba for sulfides and oxides. We're working on Me2, which is in the southwest, for oxides and sulfides. And Dumbwa, which is our flagship target, is a very, very large sulfide target. It actually has the largest geochem anomaly ever discovered in Zambia. So that's what we're about to go and drill. So I'll dive into this, and what I'm going to do is I'm going to show you 2 different things. I'm going to show you the sulfide side of what we're doing, and I'm going to show you the oxide side, but I want to split it into 2 so we can really focus on each one, particularly given how tight we're going to try and do this. So if you're looking at our property here, very distinct targets. We have Kaziba to the northwest. This is the large oxide blanket that we're currently working on with First Quantum. This is the #1 portion of our plan with First Quantum, and where we're trying to get mineralization into production at their oxide circuit within 12 months. Here's Kansanshi, 6 kilometers away. This is their haul road running right through the middle of our property and out to Sentinel. Me2, which is in the southwest, is also a large sulfide target, but with a very large oxide component. That's the second phase of our oxide plan with First Quantum. And then Dumbwa, and what you're looking at here in the center of the Dumbwa license, is the large geochem anomaly that I'm talking about. It's 20 kilometers long. It's 0.73% copper at surface. Average grade in Zambia is 0.59. That is ore grade copper in soil at surface. 20 kilometers long, the largest and highest grade on record in Zambia. So this is a really unique target, generated a lot of interest, and I'm going to show you why. So here we are on Dumbwa. This is our license. This big purple blob in the middle is the Dumbwa anomaly. As I mentioned, that's 20 kilometers long, 0.73% copper, peak grade. It's over a large distance. It's based on 6,000 soil samples. So this is a very well-defined copper target. It sits over top of a very large mag anomaly. And so you have 2 of the critical components in place. Taking it a step further, you're looking for biological anomalies in this region. So when you're looking at Lumwana, you're looking at Kamoa-Kakula and Kansanshi, one of the things that stands out is areas where no vegetation can grow. That's the key biological anomaly that tells you that there's some kind of a large sediment-hosted copper system at depth. In the case of Kamoa and in the case of Lumwana, they had these large vegetation kill zones that existed at surface. We have the same thing at Dumbwa. The vegetation kill zone can be seen from Google Earth. It's 20 kilometers long and 2 kilometers wide, and it runs over this entire thing. And this is in a vegetation-rich area. So it stands out like a sore thumb. For reasons that we believe are fully tied to copper toxicity, nothing can grow over top of this. So taking it even a step further, right where this call-out box comes to the center of the anomaly, this ground was walked by Barrick about 24 months ago, and they sampled a bedrock schist. That bedrock schist ran 1.3% copper in sulfides right at surface. And then, of course, all of these drill highlights on the left-hand side are all drill results that were drilled by us in First Quantum. They're very significant intercepts. In the case of SDDD06, that's 13.5 meters at 0.77 in sulfides right from surface with zero strip. So this system seems to be large. It seems to come right to surface. At any rate, these are shallow. We would expect that the system here is going to be running probably 80 to 120 meters deep. It's going to be flat lying. We already know that it tilts about 15 degrees to the east, and that any tonnage here is going to be built on strike. So from an economics perspective, these projects make sense. Taking the anomaly itself just over our southern boundary, you'll notice that it kind of extends into the property south of us. That property is owned by Rio Tinto. 18 months ago, maybe it was 24 months ago now, Rio Tinto drilled that. There's a copper pit there that's mined by locals. The average grade is just over 3% copper in mainly oxides, which are malachite and bornite. They drilled that. They stepped back 100 meters and drilled it, and they hit 15 meters of between 3 and 5% copper. So they were willing to share with us. They were willing to take us to see the core, and that intercept created a lot of interest. So going back just over 18 months ago, we were approached by Barrick, and that brings me to the first small digression that I want to take you guys on. There's an anecdote that I want to share that I think speaks volumes about the project, and I think it really gives you an idea of how, who's watching it and how important it is. And it comes down to this fellow right here, Kevin Bonnell. So Kevin joined our team about 6 months ago, but what I want to tell you is why Kevin joined our team. So if we go back up here and we look at this map of Zambia and the 3 big copper deposits that surround us, Lumwana, I'm sure many of you will remember, was purchased from Equinox for around $8 billion 20 years ago. Probably one of the biggest overpayments in history, but a super, super expensive acquisition. And they spent over 15 years trying to unravel Lumwana, trying to make it work. They had 1 billion tons at 0.55. They had continuity issues. They weren't able to get it sorted out. So 4 years ago, they approached this fellow, Kevin Bonnell, and they brought him in. And Kevin has a reputation in the belt. He was part of the original Freeport-McMoRan team in this area with David Broughton. And he has about 5 or 6 deposits to his credit. So he is arguably one of the top guys. Barrick brought him in, and the mandate was really simple. Take Lumwana, which is currently a tier 2 asset, and turn it into a tier 1 asset for us. Figure it out. Figure out what these continuity issues are. So they gave him the room. He built a team. His team went out, and what they did was they started looking at the surface for biological anomalies. Goal number 1, find areas where they're seeing these vegetation kill zones, and they found one. Then they looked at geochem anomalies. They did something called partial ionic leach sampling. The partial ionic leach sampling led them to a 12-kilometer long soil anomaly at surface. That 12-kilometer long soil anomaly at surface correlated with an IP survey they ran. They drilled it, and within 24 months, they defined 2 brand new deposits at Lumwana that are part of the system. One's called Lubwe, the other's called Camarende, and those equate to a new fresh 1 billion tons at 0.55%. So that is the subject of the new feasibility study that Barrick is launching, and that is the super pit that they're talking about right now that they're going to build at Lumwana. That will double the size of Lumwana and double their output. So it's a super exciting move for Barrick. They're going to become the largest deposit on the Zambian side of the belt. But more importantly, Kevin Bonnell was credited with that discovery. Following his discovery, he wrote Mark Bristow a 100-page report, and that report said, in very simple terms, if you believe in what we just did at Lumwana and you believe in copper in Zambia, the best project in the country is owned by Midnight Sun. It's called Solwezi. You need to do a deal. So that brought Barrick to the table, and Kevin was the guy that led the way. So Kevin came in, we negotiated with Barrick. We didn't go with Barrick. Unfortunately, the terms that they wanted to do covered the whole property. It wasn't a good deal for a junior. However, Kevin was so frustrated with the way that it all unfolded that he quit his job at Barrick and he joined us as our chief operating officer, simply because he believes in this project and believes in what he's going to accomplish here. So he is now on board. He's running the project. He's running all of our geology. And he's simply working at Dumbwa using the exact same methodology that he used for Lumwana. And it's quite simple. This is a flat-lying, low-strip, large-scale anomaly that looks everything like Lumwana. Lumwana is going to be 2 billion tons at 0.55%. They're both north-south trending. They both dip about 15 degrees east. The systems both seem to sit at less than 150 meters depth. They're both stacked mineralization. We know this from drilling that we've already done at Lumwana. The difference is the copper tenor and the strike length. Dumbwa is far bigger than Lumwana in terms of strike length. That 12-kilometer anomaly, we're looking at 20 kilometers of strike, but the copper tenor at Dumbwa is 0.73. At Lumwana, it was only 0.12. So there's a big difference there. Kevin thinks it correlates. What we're going to do is very, very straightforward. We're going in to do an IP survey, and that's going to take place in April. As soon as the IP is completed and we can correlate that surface geochem anomaly with the underlying mineralization we've already drilled and hit, we're going to launch a large-scale drill program, and we're finally going to build systematic scale and continuity to this thing. We've never put grades and ton to it. We've never done that much work. It needs a proper attack, so we're going to do about 10,000 meters of drilling. We're going to attack it. We've already funded the project. We've got 10 million in the bank today, so that's going into Dumbwa, and we're going to hit that. So that's the first sulfide target that we're going to unleash. And as I said, second part of April for that. And then this is the other half of our project. This is our oxide copper approach. This is our what we call a cooperative exploration plan with First Quantum, and I'll show you what this is. As we've gone out and worked on our project from north to south, we've hit oxide copper at surface repeatedly, very high-grade oxide copper, but we never looked at it with the size and scale of a standalone thing because obviously we're not going to go out and build a facility for one of these smaller copper deposits that sits at surface. However, a unique situation with Kansanshi next door is that we've been in a dialogue with them for over 2 years. We know that at Kansanshi they have 3 circuits. They have a sulfide circuit, a mixed ore circuit, and an oxide copper SXEW circuit, and they have a smelter on site. The smelter produces 1.3 million tons of sulfuric acid a year from their sulfide processing. They've just opened up a new 35-year lens. They're going to be producing sulfides for at least another 35 years. Over the last 20 years, they've utilized oxide copper to neutralize their sulfuric acid and get rid of that environmental liability. It's worked beautifully. There was a lot of oxides at Kansanshi when they first came into the project, and it worked beautifully for a long time. But there was a couple of really amazing side benefits to the whole thing. What they had an issue with is that in Zambia, there's no local market for sulfuric acid, and you can't ship it out of country. So it had to be dealt with in situ. The oxide copper that they utilized, they were getting at surface. The acid they were getting for free. By heap leaching it, they neutralized the acid and they liberated the copper in their oxides, which they were able to sell as cathode copper. And they've been making between 250 and 400 million a year from that for the last 20 years. Last year, we had this lengthy dialogue about the fact that there was oxides on our property in 2 locations. They were aware of that. This property was once First Quantum's, and they opened a dialogue with us around creating source feed for Kansanshi. We asked them last year if they wanted to do some equity financing into Midnight Sun to assist us in developing those oxides. They had just lost Cobre Panama. The timing was terrible, but what they volunteered was this idea of a cooperative exploration plan, and it's very straightforward. They would give us a geological team, which we were lacking at the time. They would give us an engineering team, and they would run all of our assays and metallurgical work at Kansanshi so that we could save all that cost. So at the end of the day, we would expedite the process of getting those assays in that network, and we would save all the costs associated. So at the end of last season, our entire drill program cost us under $400,000. That was for IP and drilling, and we accomplished an initial drill program across this oxide blanket we have here for peanuts, essentially. And that has pushed this whole process forward. Let me jump to the results, which I think speak for themselves. What we have at Kaziba can simply be described as a transported oxide blanket. It came from somewhere, okay? We're now isolating where we think that sulfide source is. The oxide blanket itself is not huge, but it's enough to give Kansanshi probably a couple of years of production. We think it'll be 2 to 3 years. The grade tenor is what blew everybody away. The initial intercepts were 21 meters of 10.69% copper. That is acid-soluble copper from surface with 0 strip. 26 meters of 5.6, 15 of 3, 7 of 4.6, super high grade. We went in there with a goal of finding somewhere in the range of a few million tons at 1% to get started. First Quantum made it clear that anything over 1 million tons for them was a win. And now we're looking at something that could be in excess of 2% average grade. It's very high grade. It is isolated. But the other thing we did when we went there is we drilled an area to the north to test the extension. That extension has paid off. We're going back in April to drill again, but we found a northeast extension to this so we can add tonnage. And we see room here to grow this thing over time to a much bigger resource that will keep First Quantum going for quite a long time. In addition to that, we ran IP over areas that we felt were sulfide sources, and that IP program was successful. So now we've got a program coming up in April we're going to launch. We're going to go after sulfides. We think we have the sulfide source ironed out for Kaziba, and we're going to go build these oxides out. But we got our starting point. We have proof of concept. The oxide plan is real. And what this is going to do is unlock serious near-term cash flow for Midnight Sun with 0 capex. So we're going to allow Midnight Sun to put this asset into First Quantum's hands. We're going to let First Quantum do everything from permitting to trucking, processing, mining, everything. And we're going to take a minority interest in this by way of a free carry. So formal mining agreement still needs to be put in place, but we have a good understanding. First Quantum understands what we need to accomplish. We understand what they want to accomplish, and we're going to work together to get that into production. And once we get there, the other area we're going to work on is called Me Too. If this is 2 to 3 years of production, this is 5 to 6 times the size. This sits over a sulfide target, and we believe that this oxide blanket is probably 5 to 7 years of production for them at a slightly lower grade, probably 0.8% copper equivalent. So all in all, we think we can give them 5 to 10 years of production, unlock serious near-term cash flow for Midnight Sun, and focus on developing each of these big sulfide targets with no further dilution. So I'm just about ready to wrap it up and hand it to you guys for questions. Really quick snapshot of our cap structure. If you look back a year ago when Doug and Matt and I first started talking about this, this was a $15 million company that traded about 20,000 shares a day. Today we've drifted a little bit over the last month or so, but peak valuation over the last few months as a $150 million company, traded as high as 91 cents. We now trade between $500,000 and $1 million a day on average. We have totally transformed this company, and we've come up with a way to move it forward with as little dilution as possible. So it's exciting. We're about to launch these 2 big programs, and if we're right, this is going to be one of the more exciting copper plays out there. So that's keeping it as concise as I can. I can't wait to hear what you guys have in mind or questions that you may have, but let's open it up.
Thanks, Adrian.
Adrian, if I could jump in and let's continue talking about the drill results.
For sure.
You had some hits and misses, and we didn't see any kind of location map of where those results are. Do the hits tie together in a way that it forms a coherent resource, or are they scattered around?
No, absolutely. It's an awesome question, Lawrence. But basically, what we did when we went out to drill is we had 31 drill holes historically that gave us this initial oxide blanket. It was about a 300-meter strike. We knew there was an area there that was, mineralized, at least in this. It's almost like malachite overburden. It's an what would you call it? It's like a transported blanket of mineralization that's broken up, and you're seeing enrichment there. So when we went in, we had these 31 drill holes. Those 31 drill holes were totally scattershot. They were mostly drilled by First Quantum. They were very random. They clearly went in looking for something else or doing something else and drilled these random intercepts of oxides. So we built a very clean grid, 50-meter spacing, and then we built a condemnation shell around that with 100-meter spacing, and we wanted to test the constraints of this thing. So there's 17 holes that are centered right in the oxide blanket on a perfect grid. Those are the ones that we released, and those are the ones that give us this basis for a resource that we will build. Those all hit, and they ranged. The lowest intercept was, let's call it 0.55 or 0.6. The highest intercept was 10.6. Gives us an average grade, depending on how you model it, of somewhere between 1% and 3%. It's very high grade. The mineralization is definitely there, and we got proof of concept. Outside of that, what we saw was that to the south, east, and west, it was more or less closed off. We found the constraints of it. We're confident that it doesn't continue in those directions, but to the northeast, it seems to. So we're going to go and do an additional 18 holes there in second week of April.
Okay, great. And another just quick question, and then
Yeah,
I'll
for sure.
leave it to the other guys. The deal with First Quantum, you
Yes.
mentioned a free carry. Can you elaborate on the terms of it?
Yeah, so final terms under a formal agreement are not cut yet. So we still need to put that in place. That's the next step. We decided to go forth with the drilling. We initially talked about putting something in place earlier. We decided to go forward under this cooperative exploration plan because it kind of benefits both of us. Really, at the end of the day, the smartest thing for us was to get an idea of what this resource actually looks like, what the size is, whether there's sulfides. Now we think we found the sulfide source, so we're going to have sulfide targets that are significant. But we wanted to get this drilling done, and we wanted to get the next round of drilling done, which will be wrapped up by, let's call it, second week of May. I think at that point, we need to get serious about the formal agreement and see what it is they want to do. The handshake agreement we currently have, what we've discussed is, and how we went into it, maybe it'll help to kind of explain our mindset going into it. When we started talking to them, we said, look, in our mind, the material we have is 50% of the equation, and your facility is the other 50% of the equation. You need this acid. There's no other source of acid or of oxide copper in the region. They have this acid. They need the oxides to neutralize it. And we figure that that represents 50% of the equation. So if you're willing to do all of the permitting, you're the largest taxpayer in the country, you tackle the permitting. We're not a producer. You tackle everything production. We don't want to get out of our lane. We know what we're good at, and we know what we're not experienced in. We'll stay in our lane as explorers and do what we do best. You guys come up with an engineering plan and a mine plan, and for that, we're willing to step back to 30%. And they said, you know what? That works perfectly for us. Let's move forward. So it kind of sits as a handshake right now.
Sorry, 30% of the top line or the bottom line?
That is yet to be.
In other words, of revenue or profit?
That remains to be hammered out, Lawrence. What we're pushing for is to treat it almost more like an NPI, where we would sit on a 30% free carry on it in that basis. But, I don't want to get over my skis and tell you it is one thing and it turns out not to be. We need to get that part hammered out when the time comes. Either way, it's going to equate to a heck of a lot of profit for us. And I can add a little bit of detail around that too, because I know this is a little bit, it's hard to kind of wrap your arms around it. So what our plan is after this next round of drilling is to publish a resource. So once we get enough drilling done that we feel comfortable that we can put a solid resource together, we know that from the last round of drilling that we're confident in that now. We've definitely got proof of concept. We know the size range that we're sitting at. We can do a back of the envelope kind of an adjustment to this. But what we'd like to do and what we negotiated with First Quantum is once this round of drilling is complete, given that they're doing all the met work and everything, they're working on specific gravity as we speak, come up with a number and give us the data because they don't want to do a resource. They could care less. They just want to see continuity. This material, and maybe I wasn't clear enough about this in the presentation portion, but this is free mining. This is stuff that is at surface with zero strip. They're going to scoop it up with an excavator. It's already broken up. They'll load it into a dump truck and take it straight to the SXEW circuit. There's zero processing. So they don't want to come up with a resource. They'll just put a constraint around it in an engineering pit that they can say, look, we can scoop this up and take it away. but they're going to hand us all of the data in basically a 43101 format where we can quickly have it upgraded and we can punch it out as a resource so that people can actually wrap their arms around what the value of this thing is and what it'll look like from a cash flow perspective. But to add to that, if you look at their financials and what they run at First Quantum at Kansanshi today, they do 25,000 tons a day currently at 0.2% copper. We're looking at handing them 25,000 tons a day at 1%. At 1%, that would equate to about 80 million pounds of copper a year. And we can do the math on how much that's worth. It's a lot of cash flow. So if we could capture a significant percentage of that as a free carry, that is a win all the way to the bank.
Okay, great. Lobo, you had your hand up. Go ahead.
Oh, I think Lobo is muted.
Oh, yeah. Lobo?
Hear me now?
Yep.
Yes.
Okay.
All right, thanks. Sorry about that. So I gather this is what you meant when you said production in 12 months at the beginning, and that
Exactly.
raised a bunch of
Yeah.
questions.
You got it.
If you're running the assays through the lab of your neighbors there, that's great. I get the cost savings. Is that 43101 compliant? Will you be able to use those?
Yeah.
43101?
We can. It's
Sorry,
actually
continuing from there.
Yeah.
I gather you're not going to produce a feasibility study. They're not going to bother with that. They're just going to do it.
Correct.
Is that what would happen?
That is exactly what happens. So that lab that's on site is actually an ALS Chemex lab. It is an independent lab. It's just on site at Kansanshi. So they're using that ALS Chemex lab to complete all the assays. And when it comes to like the ionic leach sampling we've been doing, we're independently having ALS Chemex run those at their lab in Ireland. So we're getting data from those that we can release regardless. When it comes to a feasibility study, you're totally correct. We will not go through all that process. We don't need to, they don't need to. But we can bring it up to a resource estimate that we can at least talk about the tonnage and the grade that's there so that people can get an idea of what it's going to be.
Would you, on your own, consider putting out a PEA at least, or something to put some numbers on? I mean,
We could. Yeah, we definitely could.
would you have enough data for that, I guess, is a question.
Yeah, we would have enough data for it.
All right, one more thing quick then on Kaziba.
Sure.
Is this not the property that you had a license issue not so long ago? And what was that all about? And
It was. Yeah.
are
It's the same
we
property.
worried about that happening again?
Not at all. The issue that took place, if you look at the Zambian mining cadastre and the Zambian mining offices and the way that they operate, they have a third-party arm's length entity that actually manages the upload of licenses and figures outside. It's called the Mining Cadastre Portal. Between the re-registration or the renewal of our license and the posting to the Mining Cadastre Portal, they adjusted the new, in Zambia, you lose a certain percentage of property every time you renew. So on a 3-year basis or 5-year basis, depending on your renewal, you have to reduce your property size. I think it's by 30%. And when you do, obviously those claims or that part of the property becomes available to someone else. When they applied the new name to the shred of property that we had let go on the left-hand side of our thing, if you're looking at the graphic, they posted that name across our entire property, and that graphic was posted to the cadastre portal. So we noticed it right away. It was actually somebody screen grabbed it and put it on CEO.ca. Was posted for the public to see. The stock got hammered. We went to the Zambian mining office. We couldn't believe what was happening. Basically, within 10 days, it was completely reversed, cleaned up, sorted. But then we had to get all the paperwork, and the bureaucracy behind that was very slow. So it took about 3 weeks to get it all, finished and done where we could actually put a news release out. But it was solved very quickly, and they were adamant that it was clerical and it was a screw up in the cadastre portal office. We can take it at face value. 13 years, it's the first time we've had any issues like that. And relatively speaking, it was a super fast fix anyways.
It'd be nice if there was some statement from the authorities. Okay, one more quick question. I'll let the other guys have at it.
Yeah.
Back to Lawrence's excellent point. I don't see any sections on any of your drill results.
You
I
are
found
totally
one
correct.
long section for me too, but nothing on these others.
Yeah.
So, your explanation for why 17 out of 54 holes hit at Kaziba makes sense, but
Yeah.
it would really help if I had a map and I had sections and I knew if the dots are likely to connect or not.
Totally.
Why don't you publish this?
I will tell you exactly why. When those drill results came out, they arrived the day before we were leaving for Indaba, and there was literally no time to get graphics finished that would have been good enough to release to the public. So we're going to put all of those out. Our next release is going to be IP results and all the ionic leach sampling. So we'll put those out. We'll put plan maps, we'll put graphics, and then we're going to release all the sections separately. So we'll have all of those, but they needed time to get them together, and we just couldn't do it quickly enough.
Why not on Dumbwa? We've got drill results from prior years there, 20 kilometers, and
For sure.
8 highlights. Are they even remotely connected? Are they completely different things? We have no idea from the data you're giving us.
Yeah, we'll get those out too. I think Kevin's redoing all of the data from Dumbwa, so he wants to put out a nice cohesive package on the whole thing that's fresh more than anything else. But yeah, you can release historic sections for sure.
All right, I'll turn it over to the guys.
Awesome. Thanks, Lobo.
Okay. Thanks, Lobo. Brian, I think you were next.
Lawrence and Lobo have taken some of my questions here, pulled them right out of my mouth. But I would reiterate what Lobo said. I think some sections, some drill plans would really benefit your presentation.
Yeah, for sure.
Along those lines, that 20-kilometer long Dumbwa soil anomaly, can you tell me what the criteria were for those? You have the highlight or the peak value, but for 20 kilometers long,
yeah,
that's a lot of soil samples, and that would really benefit from a plan, a soil sample map showing the intensity and really what those results are based on.
What the grades are, yeah. And the majority of the highest grade portion of it is the 16 kilometers to the south. You'll notice a little block. If I go up to the graphic, you'll see this one little piece that dips in right here. This is a gravel quarry. And the majority of the area here, most of the drilling was done around where this call out comes in, and the soil samples extend over the entire anomaly. The best portion of it is the 16 kilometers of the southern 16 kilometers, if you will. So, but we could definitely put the entire thing in there with all of the values plotted. We do have those sections and certainly can utilize those. So the other thing I think, Brian, that I should point out that's coming is, using Kevin's approach to what he did at Lumwana. The key thing was to come out with an IP survey. Their IP survey helped to correlate that surface mineralization with the sulfides at depth. And we're going to do the exact same thing here. So we're going to run 16 line kilometers of IP over this, probably 1 kilometer spacing. Then that's going to give us a lot better graphic representation of what this mineralization actually looks like at depth before we go drilling. But it would be good to post that probably with all of the soil samples over top and correlate them. The other thing is we want to go back and do what we just did at Kaziba at Dumbwa, and that is to use ionic leach sampling. So partial ionic leach is an ALS Chemex proprietary technique. It's a bit expensive, but it's extremely, extremely effective at finding mineralization that's hidden with any amount of regolith. So we're going to go in and utilize that at least over portions of Dumbwa as well before we drill. So that'll be another one, and then we can put those out with full detail as well, which will really help.
Yeah, Adrian, just as a final comment, we talked about this before, and I told you, and I agree, it has huge upside potential. It's a wonderful big picture play, but I do believe the presentation would benefit greatly by more detail.
Yeah.
More technical slides in there and more backup for the big claims. But
sure.
Otherwise, it really is a great big picture play.
Awesome. Appreciate it, Brian.
Awesome. Okay, I think Nick, you're next.
Sure. Thank you, Adrian, for the presentation. Now, as an analyst and an investor, if I'm going to look seriously at a copper company, I've got to buy into the copper investment thesis first. I mean, so I want to ask you some questions about that and then another about the valuation. So according to my numbers, and these are just rough, looking at the current demand for copper, about 10% of it is for wind and solar, and I don't know, another 5 to 10% is for electric vehicles. And that's just current demand. Future demand, I think the consensus is that this is supposed to grow with this net zero 2050 stuff. Now, I don't believe in any of this. I think it's a scam, frankly, and I don't think it's going to materialize. So if 10 to 15% or more of the copper demand is based on this, and that's going to grow into the future, is there anything to offset this? I mean, what are your thoughts on what the future copper demand is going to look like?
I think the big thing to lean on is probably around the building of these AI data centers. I think that's probably the biggest driver that's hanging out there right now. In terms of actual demand, it remains to be seen. Certainly, there's been holes poked in the EVs in terms of what the demand ended up being there. But I think the AI data center story holds true, at least for the time being. And I think that demand thesis still holds up. So we'll have to wait and see.
Okay, and in terms of valuation, I know it's tricky because I guess you don't have a published resource yet, but how do you think, looking at this, say you buy into the copper story, why wouldn't somebody consider a company in Chile, a company in the US or in the Western Hemisphere that is involved in copper? How can you value your company against other companies that investors can choose from?
Sure. So I think the easiest way to go at that is to look at the deposit type. You see a lot of arm waving around assets. You see a lot of arm waving around assets in South America, BC, Southern US. The biggest thing is that most of the assets and most of the projects that are being worked on are porphyry. They're getting deeper and deeper. I always like to say that the lowest hanging fruit has been picked, and we're seeing a lack of good porphyry assets now comparatively. Those assets tend to be very expensive. They tend to come with a very high capex, and particularly when you're looking at projects that are block cave. So they're looking now at mining techniques to get underground, take out assets that are deep but high grade, and those come with immense capex, and that capex tends to come up front. And particularly if you're looking at block cave, most of your costs are going to fall in year one. So these are difficult projects for all but the biggest companies. And if you're looking at an area like this, with sediment hosted or strata-bound deposits that are shallow and flat-lying, they are going to come with a much lower capex. And certainly, if you're looking at an area where you're surrounded by all of the biggest mining companies in the world, whether they're exploring and looking for a foothold in an asset to move forward that has the possibility of production, or they're looking for future feed, these are assets that are going to come with a way lower capex and something much more manageable than you would in a lot of those areas. So that's the biggest advantage to Zambia and certainly this district where you're dealing with predominantly deposits that are less than 100 meters, underground, flat lying, shallow, and relatively high grade.
Gotcha. Thank you.
For sure.
Okay, Adrian Day.
Yeah, hi. Good afternoon. I'm going to change tack a little bit, if I may, get away from some of the geology and stuff. So you mentioned you had $10 million in cash. Can you just sort of expand a little bit? What's your burn rate? What's your budget for the next year? When do you expect the cash flow to start? So what does it look like for the next 12 months?
Absolutely. So we raised last year when we started this process and first cut the deal with First Quantum. We announced a $3.3 million financing at 22 cents. 3.3 turned into 10. We closed 10 million in May. And the budget, as I mentioned, for last year was roughly $400,000. So we completed the drilling at Kaziba. This year, we're going in with a much bigger budget, but we had a fairly significant number of warrants priced at 3 levels. There was 40-cent warrants that expired this past January. There's a 50-cent block of warrants that expire in July of this year. And then we have 33-cent warrants attached to that $10 million financing, which have a 3-year window, and there's over 2 years left on those. The warrants that have come in so far have brought in about $3 million in cash. We are currently sitting on still over $10 million in cash in the bank today. And we expect those 50-cent warrants, which there's about 5 million of those, to be exercised, or at least a large part of those exercised between now and July, which will bring in additional capital. The budget for Kaziba for both sulfides and oxides, we've now already done our IP up there, so it's just down to those main drill targets. Those are going to be about $400,000 to $500,000, and the budget for Dumbwa is $3 million. So Dumbwa is going to be a mix of IP and drilling, and that's basically it. We're not going to need to do much work other than the other thing I mentioned, which is partial ionic leach sampling over certain sections of the Dumbwa anomaly in order to correlate that historic soil anomaly with a fresh approach and the underlying sulfides. So about 3.5 million is our budget, and the balance, of course, about 10.5 sitting in the bank today.
Okay, so that's the budget for the whole year. What's your burn rate?
60,000 a month.
Oh, okay. And I'm sorry, just a small detail.
Yeah.
Some of your warrants have been exercised. That's some of the 50 cents from July.
Yeah, they've started being exercised over the last month or two. We've seen quite a few of those exercises.
How much do you think you have left?
There's probably about 4.5 to 5 million warrants sitting there right now, is my guess.
Okay.
At 50 cents.
Okay, and when does the cash flow start?
If we're successful with First Quantum, sometime in the next 12 months.
In what, sorry?
In the next 12 months is their goal.
Okay, okay.
If like to get material going over. They've got a little bit of oxides left, but they're down to the absolute bare ending here, if you will, and they need to get that material going to their SXEW ASAP.
Okay, that's excellent. Thank you so much. Just one quick small question before I move on. I noticed Power Corp has a shareholding. Did they just acquire it? I mean, it's a pretty small shareholding for a company like Power Corp.
There is a number of shareholders. I'm not 100% sure when they came into the deal. We built a fair number of institutional holders over the last 12 months. One of the first things we did when we raised the 10 million was we put it out to a number of institutions and basically, ended up with about 16%. There's about $2.2 million worth of that $10 million financing was all institutional. I don't think Power was any part of that, but mostly Canadian funds that came into it.
Okay, yeah, in 1832, that's a really small shareholding for them.
Yeah, so 1832 is all recent. Rob has been in the market buying over the last 3 weeks.
Oh, okay.
So Rob didn't come into the financing in May and held back. So we spent a lot of time meeting and talking about the project. And then in the last few weeks, basically when he saw those Kaziba results, he stepped into the open market. So all of his stock was built in the open market, and he continues to build that position, which is awesome.
Oh, excellent. Okay, thank you. Thank you.
Yeah.
Great. Okay, Brent, you're up.
Yeah, thank you, Adrian. Look, I'm going to reiterate what some of the other guys have talked about, is that it's really difficult for us to make any sort of valuation on the company, given there's no information on the website presentation stuff to give us that detail we need. So I'm glad that you start doing that. Yeah. By way of background, I mapped Kansanshi way back when ZCCM was going private or public. And so I know the area quite well.
Yeah, for sure.
And I see it on Dumbwa, the sulfide target. Yeah. It looks like a previous company, Afromi, drilled 69 holes, or no, 156 holes. In August of 22, you noted you were drilling 29 holes. We haven't seen the results of that either. And what my concern is, what I'd want to see is, a lot of times the mineralization is very lensoidal, and that the continuity is real tough to put together. So do you have enough information to get a sense of any continuity, or is that what you're going to be working on?
We feel we do. I'm going largely, and to point out, Brent, like, I'm not a geologist, so I'll give you my version of what Kevin has been explaining. As he moves into this, he sees the same things in all of the technical data that he saw at Lumwana. In the identifying of Lubwe and Camarende, he sees the same exact signatures. He sees the same mineralization with a higher grade tenor. So when he's looking at this, he sees this large historic soil anomaly with a correlation to underlying sulfides. He feels confident in the drilling that he's seen, that it carries, and that there is continuity there. But they've never done a very good job of anything systematic. It's the same thing we saw up at Kaziba, where a lot of the drilling is fairly scattershot. In the case of First Quantum, if you look at their drilling, in particular when you're looking at the drilling they did extending to the east, they didn't account for the dip at all. So you can see when they started to miss to the east, they were basically drilling maybe not vertical holes, but close to it, and stopping short of the mineralization. Kevin picked up on that right away, and he picked up on a number of things that to him give him total confidence in the continuity of Dumbwa. You know, at the end of the day, we're going to go in and we're going to do this thing fresh. What we have is a stellar target, but it needs a proper approach that it's never had. And, you know, I think going in with somebody like Kevin leading the way that's done it repeatedly, that just did it at Lumwana and sees this as a virtually identical analog to Lumwana, he's got the right approach. And when we can get that data put out there to where we have a fresh IP to correlate whatever's at depth with this big surface anomaly, and then fresh drilling that we can start to build on, that's what we need to rely on, and that's where we need to move forward. It needs to be done the right way. Everything here was done very, very scattershot historically, enough to give us a good sense of the fact that there's a sulfide system there, but time to go and do it systematically and do it properly top to bottom.
All right, great. One last quick question. Why did Cobbold pull out so quickly without doing any real work?
I think the answer to that basically lies in Mingomba. So you're probably very familiar with Mingomba, or Lumbambe, as it was previously known.
Zimbabwe, yeah.
Yeah, so that deposit was the asset that Cobalt has been working on a lot. If you look at they just achieved a $2.5 billion valuation, and that valuation, I think I just got the same reaction from you as from every institution I've met with in the last 2 weeks. It's like, it boggles the mind how they achieved the valuation they did. At this point, they have no real assets. Lumbambe is a well-known deposit. It's been worked on a lot over the years, been around for 40 years. I think Cobalt's gone out and made claim to that as a brand new discovery. I think they're getting a lot of blowback, put simply, over the claims to that asset. And they need to focus on it. They raised $575 million to go and drill this thing. And they made it clear that that was totally their focus right now. And it was going to be at the unfortunate cost of work at Dumbwa. And we had an agreement with them that was still not finalized. They had delayed around this thing called an EPB, which is an environmental permit. It looked to us that that was just a delay tactic. And we had a conversation with them where they made it clear that they were prioritizing Mingomba, which is what they renamed Lumbambe to. You know, that's going to be their focus. We need to focus on this. This is a big win for our shareholders, and to sit on this for another year isn't fair. We've just come too far. We've done so much work this year. It's time for this to be drilled properly. And we have Kevin Bonnell, who is arguably the best guy we could have to drive this forward. So we made the decision to move on and go after it on our own. And it was mutual. You know, it wasn't it definitely wouldn't be described as Cobalt walking away. Would be described as a discussion that led to both parties saying, I think the best is that they go do Mingomba and we go do Dumbwa. So
Great, thank you. And
yeah,
good luck.
Thanks, appreciate it.
Okay, Lau.
Hi, Adrian. Nice to
Hey,
see
Lau, how are you? Good to see you too.
Thanks, great. It's my turn, but I'm seeing I'm almost out of questions at this point. Should have raised my hand sooner. Let me see. Okay, I think I've got one more left.
Sure.
So you mentioned that you have identified the northeast extension at Kajiba. So
Yes.
I'm just wondering, what's the plan for follow-up drilling there?
For sure. So the initial plan is going to be 18 holes. They're going to be vertical with a max depth of 40 meters. What we've seen is that, generally speaking, this oxide blanket is it's limited, right? We've drilled through it already. We tested 5 meters on the other side of it on every single hole we drilled in the fall of last year, and it's barren. Like once you get through that oxide blanket, we're into mineralization that is not sulfides. It's disconnected from the original sulfide source without any question. So we're going to do the same thing. When we go to the northeast, we're going to follow the extension, drill 18 holes to test it. We'll cut through by 5 meters, so max depth of 40 meters on each of those holes, all vertical, all RC. And that's going to tell us what we have there. And then we do have some other information coming here shortly around new targets. There's going to be additional oxide targets, and we figured that we found the sulfide source for this thing. So we're going to change the plan a little bit, and we're going to add an attack plan that properly addresses the sulfide targeting at Kaziba as well. So things are about to get a lot more exciting at Kaziba.
Okay, Ed.
Hi, how you guys doing?
Hey, good, Ed. How are you?
I'm all right. I'm all right. So
Good.
I've got a few questions.
Okay.
Just leave go extending on Lau's question. What do you know about the what do you already know about your the sulfide target at Gazeba?
So what we've done is we've gone out and put together, we took IP and addressed a couple of different targets, but we have another one that we're going to go and run IP over as well. So what we know is that we have run that IP over sulfides to the south. If those sulfides hit, like they light up on IP, we have a large historic geochem anomaly there, and we've done ionic leach sampling. So if you get a sulfide target that's picked up on mag in the right rock unit, and that correlates with ionic leach sampling targets that are generated in the same area with that technique, and that lines up with IP, then your quality of sulfide target is going to be really something worth going after. It's going to be outstanding. And we know there's a source there somewhere. We think it was paleo drainage channels that moved that oxide mineralization to its location where it sits today.
Right.
So the goal is correlate those targets, put them together into one. If they all line up, then we'll have a hell of a target to go and drill. And then separately, we're going to run IP over a northeastern target that sits further up towards the corner of the property on the northeast corner. And we think that's another possible sulfide source. And then, of course, we do have some oxide targets that are also worth following up. So
would First Quantum, is that part of your cooperation agreement with First Quantum? No, okay.
No. So we've made a very specific point, and something that I should have covered in the initial presentation, but the First Quantum agreement is very specific to oxides. We're cutting it off at a certain point. It's probably going to be depth-based, but transition zone for these is typically around 60 meters depth, if I'm not mistaken. And the goal would be let First Quantum take the oxides, let them take the icing off the cake, so to speak. But those deeper, bigger sulfide targets, those are ours. Those are going to stay ours, and that's the blue sky for our shareholders. So we're hanging on to those, and we're going to go develop them.
Okay. Now at Dumbwa, did Cobalt do anything at all, or
they did no work? Absolutely no work. They didn't set foot on the ground or do anything.
They didn't employ their AI in any way?
No.
No. Okay. And so what your 10,000 meter drill program, what's that going to look like? How many holes are you going to drill and how deep on that?
Still being laid out. So Kevin is literally working on it as we speak. So I don't have exact numbers yet on what he's going to drill. He's been given a $3 million budget for now, which we can increase and we're willing to increase. So we basically said to him, look, run your IP. We know he wants to do 16 line kilometers of IP. He had recommended that to Cobalt as our geological seat at the table when Cobalt was in the picture. He had recommended that to them. They weren't interested in running IP, but it was very, very successful and key to his discoveries at Lumwana.
Right.
So Kevin's going to run the IP first. That's relatively inexpensive. IP is a cheap tool. And once that's completed, then basically he can do whatever drilling he feels he needs. But we said to him, minimum 5,000 meters, push it to 10 if you want to, and you can, if it makes sense on the first pass. But get in there and go and figure out what the structure really looks like and what kind of basic size we're sitting on.
And that's going to be as soon as the season opens up?
As soon as the rainy season's done, we're putting them on the ground. So what we probably will do, at this point, it's not a problem to go in and work on IP during the tail end of the rainy season, but it's a problem for moving the drill rig around. So we may start the IP we may even do it before March. So we may get in there over the next little bit. But certainly in March, we'll be able to get in and start the IP at Kazeba and probably at Dumbwa. And then as soon as we can start drilling, we will. I would call it probably third to fourth week of April is my guess for drilling. Might even be the first week of May. But as soon as things dry out and it's safe to put a rig in there, we'll start drilling.
Okay. And so last question is just, so you've been there for a while, right?
Yes.
And you've had a number of majors look at this. You've had First Quantum, RTZ, and did Barrick look at it, I think, as well?
Barrick negotiated with us, but we turned Barrick down.
Right.
That was the genesis for Kevin joining up.
So what does Kevin see? Like, did you already mention what Kevin sees that others don't, the dip? Or is there something else?
Yeah, I think, Cobalt saw the same thing Kevin sees, and Cobalt was being led by David Broughton. David and Kevin are friends. Dave's a phenomenal geologist. Certainly he's got Kamoa-Kakula to his credit. He's a great stratabound copper guy. David saw this and still loves it. Dave saw this the same way he sees it today. He's the one that brought Kobold to the table. He identified this 8 years ago. He actually sat down with our team 8 years ago over lunch and said, look, whatever you do, sell your house, sell your kids, do whatever it takes. Don't give up this property. So we stuck with it largely because of his encouragement. And, everybody sees the same thing. The only group I think otherwise would be Rio Tinto. And Rio Tinto was around this project. This is going back 4 or 5 years ago now. But the work they did was odd at best. It seems to me that they brutally missed the boat. They went into this project with a preconceived idea, with one fellow leading the team that was very specialized in stratabound copper and a team that otherwise was specialized in porphyry. That fellow quit shortly after that they started working on the property. The only really notable drilling that they did were 4 very odd corner post holes at Kaziba that seemed to be outside of an area that most geologists have ever looked at it and said, that's where I would drill. They were stratigraphic. We can't really figure out what they were trying to accomplish. But whatever they were looking for, they didn't find. And other than that, this thing has never seen proper systematic work, Ed. And that's the thing that stood out to me when I first joined. I joined the group 2 years ago. I used to be with Oxygen Capital, and I left Oxygen. Mark O'Day decided to retire. And that put me in a position where I wanted to go and do or needed to go do something different. And this was the project that I found. And when I looked at it, the number one thing that jumped out was they'd had it for 12 years and it had never been systematically addressed. These targets they're spectacular, but they need systematic drilling. They need proper unified systematic approach from top to bottom. Dumbwa has never had that. Kaziba has never had that. Me Too has never had that. And yet the targets on each of those are really, really impressive. But I think it comes down to a function of lack of capitalization. I always argue that my number one reason that juniors go by the wayside is undercapitalizing. I've seen so many companies over the years where they do that, raising $250,000 to $500,000. They do a little bit of work and then they run out of money and they're flat on their back and they raise a little more. And it's this slow death by 1,000 cuts approach to building a project.
Yeah, it's been tough to get money, I guess, in this market for some time.
Yeah, for sure. And so they needed to do it. So we finally got enough money and the right people to drive forward with a big systematic approach. And I think that's what it needs.
Just one more question, if the other guys don't mind. Are any of the mines on that belt porphyries at all?
No, they're all stratabound.
Interesting. Is there any porphyry potential at all, or no?
I don't think so. I mean, Brent is pretty expert in this area. He might know if there's any porphyry potential in the belt. I personally, to my knowledge, it's all stratabound, sulfide hosted stuff.
Zero.
There you go.
Yeah, this is Mickey Fulp, and I am actually more than a black box. I've been in the last 2 months in 3 places that my 3 residences, and I can't find my camera, so I apologize for not being on camera. And good morning to everybody, or good afternoon, depending on where you are. I got a couple of questions. First of all, what are the copper oxide species that are encountered, and are they generally leachable?
Yes, they are leachable. They're all malachite and azurite, predominantly malachite.
Okay. I'm a geologist, so is there black copper oxides, i.e. Copper wad, which is less leachable, difficult to leach, copper manganese oxides?
No, this is all bright green malachite. 99% malachite is what we see. I mean, it is really malachite that is, as I mentioned, transported. It's broken up. Most of this stuff is at Kaziba anyways, is quite broken up and rounded from transport. So it's probably been transported a fair distance. The stuff at Me Too, which is our southwestern target, is a little bit different, not in terms of makeup. It's still almost entirely malachite, but it is in situ and it sits over top of a sulfide horizon that we've already drill tested. So we know it's in place. It has not been transported, but it's a much, much larger oxide blanket, but it's the same thing. It's all malachite.
Okay, so I didn't quite get those species, carbonate bearing, are quite acid consuming, but I understand from your presentation that First Quantum needs to get rid of acid.
Yes.
What, and you may have gone over this, what are their facilities? Do they heap leach this, or is it cement copper process, or what?
They have an SXEW circuit and they are heap leaching the oxides.
Okay.
So that heap
Okay.
leaching is how they're neutralizing the acid.
Right. Okay. So they don't really care how much acid they use.
They want to use it up. They hope they get through it all. Exactly. That's
Well,
the whole driver here.
that's pretty different than most copper oxide plays. I'm going to ask a couple of more business-oriented questions now.
Sure.
You mentioned your deal, your negotiations with First Quantum.
Yes.
30%, some sort of JV sort of thing, and you intimated at some point that you might just do an MPI on this. And as an old guy in this business, we all, or probably all of us, recognize the bean counting machinations that can go on with NPIs. And I have no idea what that's like in a third world country like Zambia. But why don't you just do an NSR with these guys? Has that been considered?
Yeah, and that could be the case too, Mickey. And what I was really getting at is that, you know, we don't have those answers simply because that negotiation is totally ongoing still. You know, we want to get to the end road here and see what this thing turns out to be after the next round of drilling. And simultaneously, they want to see what we actually have before we cut this deal. I think the biggest thing to get at is that we have this informal arrangement to get moving because they have a gun to their head to find oxides ASAP, because in a very short period of time, they're going to be stockpiling acid and have no way to get rid of that acid. So they need oxides as soon as they can get them. One way or another, we're going to end up with a situation where we're free carried for a significant amount of cash flow. We don't know whether that's going to be 20% or 35%, and we don't know whether it's going to be an NPI or an SR. What I always say is that if we could go the route of some kind of royalty, it's a much easier way to explain to the public. So of course, my job is communicating this thing, and there's nothing more difficult than getting into, I mean, we see it even in this conversation. It's a bit of a rabbit hole as to, you know, is that profit? Is it cash flow? Is it revenue? Is it how does that all work? How much actual money are you going to get out of it? At the end of the day, you know, we hope that we're going to end up with a 30% share. That's kind of where the handshake is right now. And if we could get, you know, a 30% share of cash flow from this thing, it's a lot of money. You know, and certainly if there's no CapEx for us, it's really incredible. But whether that's a smaller percentage or a larger percentage, one way or another, it's a big win. But we still need to find out what kind of shape that ends up in. We're not quite there yet.
Okay, and I have one final question, and
sure.
I have some experience, or almost had some experience in Zambia. If memory serves, it was around 2018, and tried to do a deal on a copper oxide play, and for the life of me right now, I can't remember the name. One of the people we were trying to bring in was a former Oxygen Capital guy, but the company, a private company, went kind of a different direction, and they ended up, and in retrospect, I'm glad it didn't work out for us, because they ended up getting burned badly by the Zambian government. It might have been 2017, 2018, if that makes sense to you. So that brings up geopolitical risk and the fact that a country like Zambia can change mining laws, terms, royalties, etc. Oftentimes with the election of a new government or a coup or whatever. So what's your feeling? Can you assuage some of my concerns about geopolitical risk?
For sure. So the time period you're talking about was under the previous government. And, it's the last time that they've had any difficulty around percentages, percentage ownership, and that kind of thing. By and large, it wasn't as bad as what you see in a lot of other countries, but certainly under the new government that's there, HH took over shortly after that. And he's fantastic. I mean, this is a younger guy that's very, very forward thinking and very mining oriented. He's just announced recently that not only are they working hand in hand with Ivanhoe, but they're working to elevate Zambia. So they want Zambia to be, I think Zambia is somewhere between number 5 and number 8 in the world right now for copper production. And they want to elevate to number 2 or 3. That's their goal. That's what they want to see with output. And certainly the projects are there to do it. So, this is going to be an interesting thing to see. But I think from my perspective, having joined this project within the last few years and watched Zambia from afar, I have a tremendous sense of comfort. To me, it's as easy as a jurisdiction gets. And I see worse things going on in British Columbia, where I live, and in Canada than I do in Zambia. So it seems to be a very safe and stable place. And I think the future for Zambia looks great, which is why you're seeing all of these companies come in such a big way right now.
Okay, thank you.
Yeah, for sure.
Okay, thanks, Mickey. We're 13 minutes over. So if people need to had a hard stop like Brian did, it's fine if you go, as long as the conversation stays productive. Let's say we can keep it going for another 15 minutes, assuming you can do that, Adrian.
Good, sure. Yeah.
Okay.
Rock and roll.
All right, Ed, you had your hand up.
Yeah, hi, Adrian again. Just a couple more questions. So the superset pit that Kevin found for Bear at Lumwana, is that an oxide?
No, it's sulfide.
It's all sulfide resource, eh?
Yeah, it's all sulfide.
Huh. And okay, and I know that first now I remember that I hope this doesn't sound dumb, but I remember that First Quantum had an issue in terms of they're only allowed to have so much land mass. So
yes, correct.
And I know that they're selling 20% or they're trying to sell 20% of.
Sure. Yeah, there's two. So I can give you feedback on both of those. So number one is the license that they're referring to. They had 20 licenses in Zambia, if you wind the clock back 20 years.
Right.
So the Zambian government brought in a rule that we refer to it as the use it or lose it rule, but it doesn't affect companies that are active. It affects companies that are really creating a real estate portfolio. So, a lot of companies, particularly bigger companies, will go out and take out massive swaths of land with the goal of eventually going and exploring and doing work. In the case of this property and some other licenses they had, 20 years ago, they had 20 licenses and they were only working on 5. So the Zambian government said, look, you've been sitting on this stuff for years. You're not doing anything with it. We'd like to see you release the properties that you're not active on so that other companies can go in and actually do work and move them forward and develop them. And so that's how this property ended up coming open. So in terms of the use it or lose it rule, we have that in place. It's why you have to shed a certain percentage of property as you go forward and as you move your way along. And there was a second part to your question. Sorry, what was the other part of your question, Ed?
I think what I'm getting at is, I guess, whether or not that would put a limit on them being able to acquire you in the area.
Oh, I know what it was. It was about Minera and Mitsui. The new ownership that they're talking about in some of their Zambian assets.
Right.
So what that's about is, in order to solve the issue, so of course, Cobre Panama, 5% of the world's copper production, that was First Quantum's flagship asset, and they lost that about a year ago. Essentially, the Panamanian government nationalized that asset, but through environmental lobbying, and it was a mess, an absolute mess. And when First Quantum went through that, of course, they lost their big asset, stock got hammered, all these other things. They raised 1.6 billion in debt. So mostly through BMO, and that debt is currently sitting on the books. So they're looking at ways to clean up the balance sheet. And one of the things that they've been looking at is having a company come in and acquire a minority interest, 20 to 25% of their Zambian assets for $2.5 billion. So that would give them enough capital to level their 1.6 billion debt and have $1 billion in the bank to go and do stuff with. And so that's what Minera and Mitsui are both going back and forth on right now. And we're waiting to see if they end up cutting a deal. But I think they will. I think they will for sure.
Yeah, interesting. Okay, and then one more question, just on the stock. You mentioned there's 5 million warrants left at the
Yes.
50% warrants, but there are more warrants and options, right? What are the total amounts of
Total warrants. So there's about 5 or 6 million in at 50 cents.
Right.
And then there is the balance of the warrants at 33 that were part of the $10 million financing. So there's about 40 million warrants or so that are at 33 cents that are going to expire in 2.5 years.
Right. And that's all free trading, right?
It's free trading. Yeah, there's no legend on it. We're seeing the odd bit of that getting cycled out. So if you notice, our stock has come off about 17, 18 cents over the last little bit. That is almost entirely related to warrants. So people that have taken advantage of that and rolled it out when their stock was trading at 80, 90 cents over the last month or so. And that's okay. I mean, it's actually easier for us to turn that stock over down here and create some new shareholders. So that's probably a good thing if they do that now before we really get active in the field.
Sure. Yeah, interesting.
And it's bringing in lots of capital. So that's okay too. Money for drilling is a good deal. We got to get money one way or another, and that's okay.
Yeah, that's true.
Okay, Byron, please go ahead.
Okay, thank you. Adrian, very nice presentation. Clearly you understand what you've got and you're doing a great job of explaining it.
I appreciate that.
And I couple that with a lot of great questions from our, my colleagues and our colleagues here.
Absolutely.
One or two things just on my end. I echo the geological type questions in a specific sort of way, and sort of as an outsider looking in. I mean, I've been to Africa, but almost none of my readers have ever been to Africa. Zambia,
Sure.
whatever. This whole copper belt is just this sort of copper Shangri-La. Like,
Yes.
oh, look, here's a map, and look at all these copper deposits and stuff like that. One slide with one map or one or two sentences explaining geologically what is this, would help. What is the age of the copper? What is the sort, stratobound? Yeah, but what happened? What happened and when? That sort of would satisfy my geological curiosity, and I think make it easier to explain to other people. That's just sort of an angle on mine. Another question, and so many people have touched on this, but I want to, when you're doing your metallurgy, it's copper, copper, copper. Is there anything else in there? Gold, silver,
There is.
moly, tellurium,
Yeah.
whatever.
So-
Not that you want to make this not a copper deposit, but what else is there to sweeten the pot?
Yeah, for sure. So again, at the very beginning of the presentation, I mentioned that this thing is comprised of 4 big targets that are each totally geologically unique. So one of the interesting concepts with this project, and it's easiest to show you on this slide. So you have Kaziba as target number 1. And the mineralization at Kaziba is virtually identical to what you see at Kansanshi, or that's what we've seen in the couple of drill holes that have intercepted sulfides. And in terms of the actual oxide cap, which we see there, and it's more prevalent than in some parts of the property. In the case of Me2, where we've done a fair bit of drilling, there is a nickel, cobalt, gold component. So there's actually some decent gold hits in there. Another thing that people don't talk about at Kansanshi and Sentinel, at First Quantum Sentinel mine, they do about 300,000 ounces of gold a year. People don't even talk about it. It's a footnote, but it's an important footnote. In the case of Dumbwa, we have an almost exact analog of Lumwana. Geologically, if you put the two side by side, they're virtually identical. Schist hosted, same stuff. There's almost no other metals. It's almost entirely copper. There's almost no cobalt. We don't really see any gold. You get a little bit of a kick here and there, but generally speaking, it's almost entirely copper. So it will vary from target to target, but yeah, there is a different suites of metals on different parts of the property that we will encounter. Yeah.
Yeah, that's all I had. I mean, are you going to be in Toronto next week?
Yeah, I'm actually here now. This bad background is actually a curtain in my hotel room.
Okay.
I'm fully in Toronto now. I'm here for the Red Cloud conference this week, and then I'll be doing PDAC next week. And I'm also presenting with Barrick at they're holding a special Zambia event as part of Mine Africa, and that's taking place at the Sheraton next Tuesday. And I'll be one of the main speakers at that with the exploration manager for Barrick. So the two of us are going to present with I think the deputy mines minister of Zambia or something like that. So it should be pretty awesome.
I remember some uranium hits too, Adrian. Were there
Yeah, and particularly uranium hits at Lumwana. That was one of the contaminants in the original Lumwana deposit. There was a uranium component there.
Interesting. Okay. All right. Well, this has been really good, guys. Doug, what are your thoughts? You've seen this, been watching this deal for a little while now, at least over a year. What are your thoughts?
Well, it was an excellent presentation, and the questions were equally excellent.
Agreed.
And it was very well modulated as a presentation. So I think it's time for some arm waving. It was an atypical presentation in that there was no arm waving. It just amazes me. So if we do some and limit ourselves just to the oxide deposit, which is near term, and of course, this is going to be dependent on copper prices and the exact terms of the deal you cut and the exact rate they're going to be able to pour acid on it, and the rest of this type of thing. But you've probably conjectured about what this should or could look to Midnight Sun in terms of dollars of income. And what do you think? What do you hope as you eyeball these things in the next year or so, starting a year from now?
Sure.
Whatever.
I mean, we think if we arm wave based on purely their financials, we can use their financials. We have a model there at 25,000 tons a day. If 1% is the number, on the absolute low end, $30 million. On the high end, it could be 100 to 110. That's a lot of cash flow year after year with no capex on either end of that scale.
Well, that's fantastic. So if we have 150 million shares, is that correct? Fully diluted to 150 million?
It's closer to 200 fully diluted.
Okay, so all right, you could get up to $1 a share, I suppose. What are you going to do with that money when it comes in? Is that all going to be reinvested in the sulfides, or what are the prospects for using all that cash?
I think you can look at it at Kaziba, Me Too, Dumbwa. Each of those targets needs $10 to $15 million in drilling to fully establish it as a fully fleshed out deposit, whether it's 1 billion tons, 500 million tons, whatever that may be. So I think you allocate the correct amount of money to each of those targets to drill them systematically, drill them properly, prove out what they are, or at least show, and keeping in mind, at the end of the day, it's to draw a picture here to create an ultimate M&A target. We're not building a mine. So we want to make sure that any of those companies around us are looking at this from a valuation perspective. So you lay out enough capital to do that, and the rest of it, I think you issue it as a dividend. And I think it's the right way to do it. I have almost never seen a junior issue a dividend. And if you had enough capital coming in that you actually could issue a dividend, I think you do it.
I think that makes all the sense in the world, although the gold ring is obviously to get a deposit that you can peddle for $1 billion or $2 billion.
Exactly.
Right?
And that's the whole goal here. Build an M&A package that is irrefutable and that any major in the area would want to own. You have BHP, you have Rio Tinto, you have Freeport, you have, who knows if Glencore will come in, they're not there yet. You have all of these companies, and Barrick's already shown their hand. They've already told us and shown us that they're interested in having this asset. All of those entities are looking to have this. Ivanhoe's coming in and looking at grassroots targets generated by a regional airborne that the government flew. You don't think Ivanhoe would love to come in and be able to buy a turnkey situation that has a couple of deposits in place that they can go and work on? Of course, like it makes nothing but sense. So for us, get it to that point and let it go to the highest bidder. And in the meantime, create as much competitive tension as we can, make sure everybody in the area knows what we're doing. And we're the key player. I mean, there's no one else in this camp that has 500 square kilometers. There's no one else that has 4 big targets. There's no one else that has a Dumbwa or a Kaziba or a potential for oxide cash flow. So you've already created a great M&A target. Now we just need to build it out and get it to a point where they can't leave it sitting there. And that really is the end of the game for us.
So is there anything that scares you? Anything that might go wrong that is in the back of your mind?
The only thing we can't control, in my mind, I mean, obviously, geopolitical risk is very low. we feel really comfortable in Zambia. We really have no fears about geopolitical risk. Geological risk, at the end of the day, whatever's there has been there for millions of years. We just need to go and prove the size of whatever it is. But you don't have the kinds of targets we have without significant mineralization being there. We're confident that there's going to be some big discoveries on this thing, and we've already done that with Kaziba. So Kaziba is already real. We've got proof of concept. We were super successful in our drilling last year. The things that scare me are bigger market situations that we can't control. Copper prices. And quite frankly, I'm not worried about the copper price and the thesis for copper. I do think that it has legs, and I do think that there is enough here to drive copper and continue to drive it and keep the prices where they are. It's to me, there's not a lot of downside or things that scare me about this project.
Okay, great. Anyone else have any last questions? We've gone a little long, but if you have other questions, let's get them answered.
Well, I think maybe all of us have more questions, and perhaps another session like this with Kevin would be useful.
Would be awesome.
But
yeah, that would be great.
For now, from what I've heard so far, this is it's a great target. It's in an exceptional region. There's lots of potential. And it's that very rare situation where you might be able to fund it with cash flow. So makes it a really interesting situation and worth knowing a lot more about it.
Appreciate that.
And Doug, I don't know if you remember, but over 20 years ago, you and I toured around this area and the different political situation at that point. And I remember you and I chatting with about a 14-year-old with an automatic rifle at who's standing guard over the regional airport there.
Oh, I do remember that, as a matter of fact, Lawrence. But the good news is that the real nastiness in the Congo is happening up around Lake Kivu in the east. And fortunately, this is next to Katanga. So we're probably pretty insulated from that type of thing in the Congo. And it is the Congo, not Zambia. But yeah, I do.
Right.
I do.
And
It was
that
actually a little
activity
bit
in the
scary,
Congo
actually.
is making this area look more attractive.
That's true. And
Absolutely.
those droopy-eyed teenagers, heavily armed, were a little bit scary. There's
Yes.
nothing like a young male on dope who's heavily armed to make your day go bad.
Exactly.
Okay.
Okay, thanks, guys. Really interesting presentation.
Excellent.
You have to stay out of Chicago or Baltimore then.
Yeah, that's more dangerous, I think, than Zambia right now.
But the only copper there, though, is in the pipes that they're tearing out of the buildings.
That's right, guys. I want to thank you for this. It's been really wonderful. I've learned a lot. I love this. I love this strong questioning and about the transparency of the drilling and all that stuff. I think that's really healthy, and I think hopefully that'll help improve the presentation going forward.
Absolutely. Absolutely. No, I appreciate it. I appreciate everybody taking the time. And yeah, the feedback's immense. I mean, you guys have probably seen more presentations than anybody else in the sector. It's literally what you do for a living. You get to listen to people do what we do. And the feedback is incredibly valuable for me, certainly, to go and add a few things in here. And I think too, it's a case of, as we move forward and we evolve and we create geological data that's not just historical in nature, that's fresh, that's new, that we can lean on 100%, our confidence in putting detail out there is through the roof. And I love Lawrence's idea of putting together a technical session with Kevin, because I think if Kevin was able to show you the graphics that we utilize behind the scenes in Leapfrog and some of the other programs with his sections, which we are putting out, some of those are going to come out with the next news release. I think it would go a long way to showing you what it is we're seeing that makes us so excited and so confident, and what makes him so confident in these targets. So next step is to get some big geological data out there that you guys can look at and tear apart.
Okay, great. Adrian, if you don't mind, if you want to exit at this point, I just want to stay on for 5 more minutes with panelists, if that's okay, just to get some feedback.
Sounds good. Excellent. Thanks, everybody.
Adrian, really appreciate it.
You bet. Take care.
Excellent.
All right, guys, since this is our maiden voyage with this, I just wanted some feedback. Some were concerned about the number of participants, that everyone wouldn't be able to get to their questions. If you have thoughts on the structure overall or what we might do better, I'd love to hear it just while I've got you all at once.
I thought it was terrific. I thought it was a really good idea. Very innovative approach.
I
would
thought it was
probably
very,
limit it to 5 people because, as Lau said, and, the people at the end, Byron, their questions were already asked, and you're struggling to find one more that hasn't been asked, that's okay. But obviously, I don't think we needed this many combined centuries of experience on the panel, as impressive as it was. It got covered. I will say, between us, now that Adrian, we've lost 2 Adrians, I guess. He did dodge some questions. He didn't really answer Brent's question directly. And he didn't answer my question either. I mean, 3 or 4 of us beat him up on the lack of sections, and to say, oh, well, we were running to the conference. Well, what about the drill results from 2 years ago?
I thought that was an excellent point, Lobo. I thought that was a fantastic point.
So I'm just between us here. Doug, you flattered him on an excellent presentation, but I felt that he was not entirely honest with us in answering the questions here, their issues. You have a 100 million valuation and they have nothing. They have no deposit. There's no 43-101. There's a great story. We're going to have this cash flow. It's going to pay. We're going to drill off the sulfides. It's going to be billions of dollars. I heard that before and it hasn't worked out. So great story. And when we ask him about the facts to back it up, he dodged the questions. So I love you, brother. I'm just planting that word for the wise in your ear.
Yeah, I would agree.
Yep.
With you. I'm with you there, Lobo. But I'm not sure facts matter anymore in this world.
Well, I can't argue that one.
That's right. This is the junior mining space. I mean, facts are actually secondary.
Right.
So I would suggest that he went over his 10 minutes, but it's generally pretty hard to tell a story like this in 10 minutes. Perhaps if we could have gotten, and I'll agree with Brent and Lobo about the lack of geological data, and the history of the project. It's really hard to summarize something like this in 10 minutes. So perhaps if we could have gotten the presentation in advance, would make us a little bit more point on in our questions.
That's a great suggestion, Mickey. Thank you.
Yeah, that's an easy one, the presentation in advance, or combining Mickey and Lawrence. It's not to make them licky, but if there was a technical presentation, like, for the audience out there, if this goes before an audience, you wouldn't want to have an hour-long technical presentation. But if there was one, if they had that data and they sent this to us in advance, then that could sort of make it off stage for too much detail, but make for much more focused questions and maybe more useful conversation.
Well, what you guys are saying about the lack of detailed drill results and total geological mapping and all this type of thing. Yeah, but I think the strongest part of this story is they have a lot of oxides, and they're at the surface, and there's a lot of sulfuric acid that has to be gotten rid of somehow, somebody with the problem. So that part holds together. And
well, does it, Doug?
I can't see
First
what
Quantum
can go
hasn't
wrong.
signed on the dotted line. Why? Why are they being cagey? Like, if that's really so obvious, if it's right there, why haven't they said, okay, yeah, we'll give you 30% for this. Let's go. We need this now.
Well, that's right.
They say they have this, but where's the sections? What, where's the model?
Well, we just go into a waiting period and see if they come up with what we've asked for.
Or to Doug's point, the stock could 10x just on the story. I wouldn't disagree with that at all. But I'm looking at 100 million valuation, and there's no 43-101. There's just this exciting story.
150 million.
I think that was last week.
I think they're.
Well, it's down it's 87 cents. So
I think given that they're not going to be drilling for a few months, they're going to have a bit of a warrant and option problem anyways.
Yeah.
Well, on the bright side, those are all in Canadian dollars, so.
No, well, really, the bright side is that they have the money. If we just had the great story and this was because now give us money, we need to finance to do this, that would be huge. That would be a big red flag for me. But the fact that, they've got the money and they can, put up or shut up, we'll see.
One thing to Doug's point on the facts of the matter and stuff like that. I mean, if the facts were all known, then there probably wouldn't be much of a speculation either.
Well, okay, but if the facts are unknown and it was a 5 or 10 million market cap company, then sure, as Doug used to say, maybe worth a punt. But at this point, if they disappointed somewhere, if any of the facts forthcoming,
I hear you,
poke holes in the stories, there's plenty of room to get hurt here.
On the whole, I presume all of you guys would like to hear more of these stories.
Yeah.
I mean, I love listening to stories, quite frankly.
Absolutely.
Yes.
Normally, these expert roundtable sessions are simply one session. But as you probably saw, there were a lot of unanswered questions from our experts. They really wanted to understand the geology more. And so what we did is we did a second one. And it's very important. So if you want to learn a lot about geology and you want to really understand what they're working with here at Midnight Sun, stay tuned for part 2. Here it comes.
Okay, guys, so we've got Adrian and we've got Kevin Bunnell there too. So just try and get to the questions, guys. Get them answered. So Adrian, where did you go?
I'm here somewhere. I can see.
Go ahead. I'll pass it over to you. Go ahead.
Excellent. Really appreciate it. So, thanks to everyone else that's joining again for this kind of second round today. Obviously, Brian, we spoke briefly by email, and Lawrence, we had a good chance to catch up at the conference at PDAC. So we've had a bit of a follow-up chat, but I think that really at the end of the day, I sent a few graphics your way. There's a whole lot more coming, but the best thing we could possibly do was give you a chance to see not just my pitch on the story, but get you introduced to Kevin and let Kevin show you what he's doing and what he's working on. But I want to give you a little preamble before we get into that, only because I want to give everybody some context. I really want to pump Kevin's tires a little bit here and talk about what he's accomplished before he gets into it. Obviously, I'm sure he won't do it himself, and it deserves to be done. Kevin, we did discuss this on the last call. He led the team that basically transformed Barrick's Lumwana mine over the last little while. And I spent a lot of time with Barrick at PDAC last week. In particular, their head of exploration, which is a guy named Robert Kayempa, and I presented with the Deputy Secretary of the Mines Ministry of Zambia at a special event last week. And they went into great detail about what they have found, what Kevin's team put together at Lumwana. So to give you some quick context, it was in the email I sent out last night to Matt. The Lumwana mine 4 years ago was 900 million tons at 0.55, and it didn't hang together. Kevin's work at Lumwana, Kevin's team's discoveries at Lumwana have moved that now to almost 1.7 billion tons. It's the biggest deposit in the belt, still at 0.55. They took it from 3 million tons of contained copper to 9 million tons of contained copper. And the new feasibility study and the super pit they're building are going to double the output of Lumwana. It is nothing short of staggering. I mean, it really is a completely transformative discovery. Everybody on the Barrick team carries the exact same attitude towards Dumbwa that Kevin does, that it is a Lumwana analog. It looks virtually identical. They're just as excited about it as Kevin is. So I just wanted to give you some context. That was Kevin's work at Lumwana, and he's going to be using that same strategy and same plan towards Dumbwa. But of course, we've let him loose on Kaziba, and the work he's done at Kaziba last while has been really fantastic as well. So that's it, Kevin. I'm done pumping your tires. I'm going to hand you the reins and let you explain to everybody what you're going to accomplish and what you're working on.
Yeah, thanks, Adrian. I'm blushing here. Okay, so I'm going to take you through a bit of history. I'm going to take you through our recent work, and then I want to take you through where I'm trying to guide the exploration program to start realizing the potential of some of the things we're looking at. We're going to start at Kasiba. I'll be brief, but feel free to interrupt me with questions if I'm going too fast or you didn't quite get a point I'm trying to make. And I'll finish up on Dumbwa because, you know, Dumbwa's only literally just landed back in our laps. I joined Midnight Sun in June last year. We've already got one successful drill program under our belt at the Kasiba exotic malachite occurrence, which looks pretty good for us. But there's a lot more to the story to be told, and that's what we're working on. Just as a very, very brief bio, I've been working in Zambia in the Copper Belt for nearly 30 years, other than a 3-year break when I was with the British Geological Survey as a minerals economist. I finished my corporate career really with Freeport. I was 13 years the African exploration manager for Freeport McMoran until they took the strategic decision to knock Greenfield's copper exploration on its head. And then I joined Barrick for 2 years, and after 2 years of that, I decided to move back into consultancy, and then took the decision on the basis of what I saw Midnight Sun had while I was the exploration manager at Lumwana, to join Midnight Sun and drive their exploration and the prospects of these licenses forwards to discovery. So I'm hoping the share screen is. I don't do PowerPoints, to be absolutely honest. I prefer GIS because if there's questions, I can always jump between layers. But where did it all begin? At Kasiba. Well, we're going to start with Kasiba. I'm just going to throw up the V10 for now. So during the joint venture with Rio Tinto, they did fly V10 over all the licenses with some good results and some curious results. You'd expect that from a big V10 data set, but the first task I was given by the Midnight Sun board was to really look at the Kasiba license. And after a couple of wobbles with the government here regarding the license standing, we got that fixed, and I started work. And the first place to start was the historical geochemistry. Now, the historical geochem was a real mixed bag. Multi-generations of surveys, different samplers, different geologists, different analytical techniques. Some of the sampling goes back as long as the 1960s when they were using gas chromatography, and then up to the sort of, you know, mid 2000s, late 2000s, when we start seeing the first generation of PXRF come into play as an exploration tool, and there's some wet chem thrown in there as well. So I took the database, I did as much leveling as I could so that the different types of data would actually talk to each other, and fairly quickly, you know, a couple of very, very subtle soil anomalies came up, and it turned out, at least at Kasiba, the malachite occurrence, that there had been a bit of AC and RC drilling, and they'd found the malachite occurrence. So, you know, the logical first step was to put some numbers to it, you know, get it from advanced target to resource, and we're almost done with that now. We're just waiting for some final SG measurements in. We've got a top guy working on that, so shortly we'll have the 3D models, the surfaces and everything else to present. But as of right now, we're not quite there with things like sections. So I'm going to talk about the general history, what makes these targets so prospective, and where we will be taking them over the next 9 months to the end of 2025. So when I processed the geochemical data over Kasiba, generally speaking, in my experience in the Zambian copper belt, you don't start getting excited or even interested about a copper anomaly until you pass 250 ppm. Below 250 ppm, there's a lot of background, perfectly natural stratigraphic processes which can get copper up to those sort of levels. Black shales, carbonaceous shales can all carry significant background copper. And of course, you've always got the late Lithilian gabbro intrusions, which are, you know, give more red herrings than you'd possibly believe. You'd think as an industry we would have gotten good enough at eliminating them now on the basis of geochemistry, but certainly in the early part of my career, I seem to have drilled an awful lot of them. So I did some probability analyses on the original historical data set, and 2 things dropped out. The first thing that dropped out was Kasiba. And again, we're looking at sub 250 ppm copper here. We don't know the regolith. We don't understand the regolith at Casiba. It's very complex. It's suppressive, I think, in the main. It's very thick. I've just been going through the old Rio Tinto AC program, and it varies between 25 meters and over 70 meters thick as a soil profile. And it's very hard to see a bedrock mineralization signal through that amount of suppressive cover. And a lot of it is transported. We've seen evidence for that at Casiba itself in the partial leach program. But I was able to tease out of the data Casiba, which came through as a damn near perfect Archer's bullseye anomaly. You know, you've got your extremely anomalous samples in the core. It fades away around the edge, and then it fades to black as you go into the natural geochemical background. So that was a very good result from that study, which goes all the way back actually to July, August when I first joined. And then I got very curious about a second set, and there literally is nothing else in the historical data. You can see sample spacing is very wide. PXRF, which I don't believe is a particularly effective geochemical exploration tool, and certainly that's true in Casiba. You can see a very curious anomaly dropped out here. It's not as well constrained as Casiba. You know, Casiba is such a beautiful bullseye, and this one was a lot more diffuse, a lot more scattered, a lot more broken up. A couple of 99 percentile copper samples in it. This is just copper I'm looking at. There's really nothing else in the database that isn't so riddled with lower detection error codes that it's usable. But I got very curious about that, and two things caught my attention. The first thing is, look, you know, it was really the only thing that catches the eye in the region, in the license. But the second thing is, geologically, it's in the right place. So what do I mean by the right place? I don't know how up you guys are. I'm assuming you've got some working knowledge of copper belt geology, but the Lower Rhone or Shale mine series is the lowermost unit of the Katangan stratigraphy, which started forming about 880 million years ago, right through until about 550. So it's a very, very thick sedimentary pile, which we call the Katangan supergroup. And the majority of copper produced in the copper belt at the moment, although Kamoa is slowly changing that ratio, about 80% of all copper in the Zambian and Congo copper belt come from that horizon, where the lowermost Katangan sits directly on a more older crystalline basement rocks. So the Solwezi Dome is an example of a crystalline basement rock, the Mombeji Dome, the Kabompo Dome, the Lushishi Dome. These are inliers of much older rocks, nearly 1 billion years separate the two. And that's where you tend to find the copper, mainly because during the Lithuanian orogeny, as the copper pregnant brines, the hydrothermal fluids were migrating and being pushed around the sedimentary pile, the copper tends to precipitate at the first reductant. This was an idea First Quantum kind of pioneered about 20 years ago, and pretty much it's true. Kamoa, first reductant. Kansanshi, first reductant as far as we know. We've never drilled that far under Kansanshi. But the first reductant seems to be key, and the first reductant tends to occur in the lowermost part of the stratigraphy. So we're in a great geology place. Already we're starting to see a little bit of consistency. We've got a geochemical anomaly as subtle as it was in the historical data in the right geology, in what should be Lower Rhone mine series. The hashed out area, the reason why I'm calling it Lower Rhone mine series, has been interpreted, and I don't actually disagree that this is a shallow dome, unexposed. Like I said, it's under a very thick soil profile, but it is more ancient rock. It is one of these domes coming near surface, and that puts us in the right place. We're in the hanging wall of one of these ancient basement protrusions. So I decided two approaches to working up what we ended up calling Casiba Target 2, and that was I wanted to blanket the license in partial leach, partial ionic leach. It's a fairly new method. It's like MMI version 2.0. It's extremely sensitive, but I think more importantly, it's not as sensitive to suppressive, transported, complex regolith as conventional geochemistry is. More expensive, $40 a sample, but it gives you a full 61 element suite, and it's very, very good at pulling copper out of the data that you cannot easily subscribe to background processes. None of us want to go chasing dead rocks. So I like it from that perspective. At the same time, I rolled the dice. I took a chance. I decided to do some IP over this funny little anomaly as well, just to see if we have any chargeable units in the stratigraphy with low resistivity. Can I find a coherent copper anomaly over this? Can I get more geological consistency? And I think the answer speaks very much for itself. So the first thing we're going to load up is just the copper. There's a lot more you can do with the data. You can do factor analysis, you can do k-means, cluster analysis. It all pretty much gives the same map. The copper isn't really correlating with anything. These are pure copper plays. And the partial leach looked like this. It came back really, really, really well. I was very pleased with the results. So now we've added another very valuable data layer. We've turned this disparate, hard to interpret, old geochemical anomaly into something which looks stratigraphic. It's in the right place. It's running along the contact of the Katangan with older interpreted basement rocks. We'll confirm their basement, I think, when we drill this. So that was a great result from the program. The other thing of interest was Kasiba came up as a beautiful teenage zit, just waiting to be popped. So the partial leach program was effective at pulling that out as a significant anomaly, but it also pulled out a couple more. It pulled out this one, which we are calling Kasiba Target 2, Kasiba Oxide Target 2, and it pulled this one out as well, very close to the edge of the license. I think one day we might be talking to the guys that own the property to the east of us. It pulled out a very, very nice circular pimple-like anomaly that is very similar to what we see at Kasiba. So we're going to test these with AC. We're going to do 2 lines of AC, 3 lines of AC over each of these pimples this year. The program's been designed. We're currently costing it. And just to see if we have 2 more of these high-grade exotic oxide occurrences in the overburden. Of course, at Kasiba, we've got to finish the RC program. We were stopped by the farmers, but they'll harvest towards the end of April, beginning of May. Once they've pulled their crops out of the ground, then we will go back in and see if Kasiba does indeed continue to the north. There's also this quite strange sort of dumbbell shaped anomaly running from Kasiba to the east. Again, you know, the AC drilling will test these for the presence of significant copper oxides. And ultimately, you know, finding the source of Kasiba remains a credible target within the area. And again, the reason why I liked this target down here, and I was very pleased to see a copper anomaly over it, is it's a possible source of Kasiba. So at the same time we were taking the partial leach, we decided to run a few lines of IP along the same sample lines that you can see here to check for chargeable stratigraphy, preferably with low resistivity, which is more or less diagnostic for sulfides in stratigraphy, although not necessarily copper sulfides. Pyrite does it as well. And this is what we got. So we're going to load up the IP now. Again, we've got multiple layer. We've modeled it at 1300, 1325. These are above sea level, not depth from surface. And when you drop the chargeability onto the map, you get an absolute beauty of a chargeable zone. It's unfortunate that we didn't go as far southwest as maybe we should have. But again, this was a pretty blind IP program. I was kind of guessing if there was a chargeability, if there was a chargeable body in the stratigraphy, that's where it'll be. So we are going to extend the IP lines to close this off. But the one-to-one coincidence with the underlying soil anomaly, it really does build confidence that we're onto something real here. So to flick off the chargeability, the next thing we need to see from our IP is low resistivity. And sure enough, we've got it, and we've got it in spades. And it sits right over the top of the main part of the copper anomaly. So at this stage in an exploration program, as an exploration manager myself, I really couldn't be more pleased with the results. This was a good takeaway for us. Just to flick that off, we are planning to drill it. Again, as soon as the ground dries out, we've had a record-breaking rainy season here. We've got 6 holes planned. 7 holes actually into this anomaly, and this is where we really want to start seeing, getting some intercepts. We've got good dip solution from the IP. We did pole dipole, so we know it's dipping off to the southwest. Our holes need to be orientated northeast at around about 70 degrees.
Hey, Kevin, I don't know if you saw Brent just asked what the IP line spacing was.
The IP lines, I can put the IP lines up for you. There's the IP lines. And the spacing is, I think, about 500 meters, 220 meters right across. So the whole IP width is 1.2 kilometers. And the entire anomaly is going on 3.8 kilometers. So there's a lot of copper anomaly there to work on. So a very, very good result. We will be drilling in the next month or two. There's a bit of a rig shortage in Zambia, as I found out with my preliminary inquiries. But AC rigs we can get fairly easily. We can knock out these oxide opportunities here, possibilities here, and then we will actually get some drilling done in this target and hopefully grow it towards the southeast. So in a nutshell, that is where we are with Kasiba. I think we're in a good space.
Sorry to jump in again, but we just had a question from Byron King that was asking what the depth to basement is and what the expected depth of mineralization is.
If you drill in the basement, then you're probably looking at between 40 and 70 meters to get a fresh rock intercept. We are trying to intercept the IP chargeable body at about 120 meters down the hole. That would translate to probably around about 80 meters vertical, according to our dip calculations, because we want to get into the fresh stuff. We want to get into the sulfides and then move to any potential oxide cap. Although right now there's not really any evidence for an oxide cap. So, and the other thing we're going to do is we're going to go with RC. We've got a big program planned this year. We're going to be spending a lot of money. This is an ore, not ore advanced target. That's what we need to know right now. If we go through 10 meters at 1 to 3% copper in the RC, we can always stop the program and bring a diamond rig in and actually start getting good diamond core where we can do a lot more measurement structures and so on. But for now, RC will answer the key question: is it ore? Is it low grade? Where is it in the stratigraphy? We should answer those very important questions with that program.
Okay, we got one more, Kev. Brian was just asking what the depth of the IP slices was.
These are 100 meters, 125, 150.
Okay.
So it's from sea level.
Nice.
Okay. Right. Okay. That's Kasiba. Any more questions before I move on to Me Too?
Doesn't look like it, but if anybody has one, feel free to jump in.
I can always jump
Ed,
backwards. I don't mind.
it looks like we've got one more from Ed. Go ahead, Ed. I don't know if you want to just turn your mic off and ask, or if you want to punch it into the screen, whatever. Ed's asking about previous drilling.
Oh, there it is. Sorry, I had trouble figuring out which button to
No
press.
problem. So the only real drilling that was done over target 2 was the Rio Tinto program that was conducted in 2020, and they didn't do a great job. I mean, those lines there are the Rio Tinto drilling. We call these the SOLD series. And the more I look at the program, the less I trust it. It's riddled with error codes. I mean, they defaulted 0.5 ppm copper where they didn't see any copper. They went right through Kasiba and came back with nothing. So that's really the only drilling that we have, modern drilling anyway. We have old drilling up here, which did give us some copper numbers, some good copper numbers, but there was something wrong with the AC program by Rio Tinto. And on this actual target itself, they did get to bedrock, and again, a few thousand ppm. But I mean, the spacing of this program is 500 meters. And I mean, if we're looking at something which has a subsurface crop width of maybe 20 meters, what are the chances of your AC hole going straight into it? So all the AC does here really is say, look, there's some copper nearby, but it doesn't tell you anything about where it's coming from. You can't vector it at all. So there is some copper in the old AC holes, but they didn't actually hit whatever is bleeding this into the soil overhead.
But no core holes or any.
No coral, no. 90% of everything that's ever been drilled in this license is air core.
Super.
Or,
Okay.
or rotary air blast. I mean, there was a couple of deeper RC holes into Casiba, but again, they didn't go far because once you're into the dolomite, you're out of the ore body. The dolomite is barren. And as a standard on every single hole we did when we do the resource drill out at Casiba, we penetrated 5 meters of bedrock just in case there was a source there, but there wasn't. It was just dead dolomite. So I don't think there's any reason to, give it a negative score on the basis that the Rio Tinto AC program only picked up a few thousand ppm, because that's all they managed to do at Casiba as well. There was something wrong with their program. I don't know what. I might go in there one day and ask and say, look, I don't know what you guys are doing. Maybe you can help me. But and you can see they missed a lot of stuff. That pimple falls between holes. That one there, they barely clipped it. There's a couple have gone across here. Again, they've got squirts, but nothing you want to follow up, which is probably part of the reason why they walked away.
Yeah, thanks.
Kevin, before we leave Casiba, can you elaborate a little on the oxide potential? The area that's being drilled is still open to the northeast, I believe. It looks like to the southwest trends onto an adjacent property. And then you mentioned there's two other areas that have potential but haven't yet been explored in any way. What's your intention now with regard to the oxide?
Okay, well, we've had a number of conversations. I mean, look, although the program was fixed as a resource drill out, 50-meter spacing and 100-meter envelope, the northeast extension we picked up was inside the 100-meter envelope, which originally I designed for condemnation. I thought, we pretty much understood what Casiba is, and suddenly we had a couple of kicks in the envelope towards the northeast. But unfortunately, we weren't able to drill any further in that because of farms. The maize was growing, and we tried everything. I mean, we offered to transplant their plants. We offered to, build them a nursery, and they could use that and then put their plants back. And they all said no. It was just we just couldn't win that argument. So we said we'll come back in April, which is precisely what we intend to do. And we're going to keep on following it to the northeast until we can't find it anymore. I mean, look, you look at the malachite fragments, they're rounded. They've been tumbled. They've been abraded. This is a paleo channel in the bedrock. This was something running through the dolomite. We don't know the direction of the paleo channel at the moment. Clever, the geologist I've hired from Barrick, is currently trying to build a 3D surface of the bedrock from the RC program, and he's also doing our mineralization envelope. And I've got another consulting resource geologist putting some concrete numbers to the grade and tonnage at Casiba. We've had an internal conversation about possibly using LiDAR to pick up the bedrock interface, the overburden bedrock contact, and building a 3D surface on that to see if we can trace these paleo channels. But it's for the size of the area we need to do it in, it is fantastically expensive. It gets to the point where, do we want to do a LiDAR and find these channels and then drill them, or do we just do a close-spaced AC program and follow the mineralization? I mean, they're that close in cost. So I think it's a conversation we haven't concluded. I'm leaning towards just carrying on drilling and following the paleo channel. And if we lose it, maybe talking about a limited LiDAR survey. But really, LiDAR is fantastic, but the cost is very high. We've got to get it in from overseas. It'll take a long time to put together. I'm sure the results will be fantastic and answer the questions we need answered. I just wonder if that money isn't better spent on some of their other targets in drill meters rather than LiDAR sound maps, radar maps, I suppose I should say.
Hey, Kev. Brent Cook just asked if he just said he's confused and is asking whether these geochem anomalies are connected to paleo channels or not.
This one here is. We're dealing with two different target types. Casiba is transported malachite boulders and cobbles, stones. Okay, that's why we think it's in the paleo channel. This is not a paleo channel. This is a stratigraphic target. This is a hard rock target. I don't think the overburden carries anything here. Maybe a little bit of oxide at the base. So you can imagine there's a mineralized layer, maybe a shale or a conglomerate running along the contact with the Casiba dome. That's a lithological stratigraphic target. Casiba is an exotic transported malachite target. This is a malachite transported target. This is a malachite transported target. There's two distinct target styles here. Does that clarify it for you? All good?
I think so. Yeah, feel free to unmute,
Yeah.
hop on there, Brent, if you want as well, if that's easier.
Yeah, unmute if you wish.
Okay, so I'm still confused. I'm not seeing your pointer, so I can't see which ones you're pointing to.
You can't see the maps.
The little pointer to the northwest, that
Okay,
is
I'm zooming
transported.
in. Yeah, so what you're looking at right now is the stratigraphic hard rock target. That's a classic Zambian copper belt mineralized stratigraphic target. Going back, I'm sorry, I didn't realize you couldn't see the pointer. I'm so sorry about that. That is Casiba. That's a transported exotic malachite occurrence in overburden. That's the one.
Okay, so the one to the southwest is called what?
Casiba target 2.
2. Okay, got it. Thank you.
So I'm sorry for not being clearer.
Okay.
Okay, so
just to jump in. Sorry, just to jump in as well. The other 3 new anomalies that Kevin was referring to, which are north of Casiba target 2 and to the east, those are looking like more oxide blankets as well. Is that correct, Kev?
Entirely correct. Entirely correct. They've got a very round pimple shape. You can't see any stratigraphic lithological control on them. I mean, you'd look for long linear anomalies like we have at target 2. So that I'm interpreting as an exploration target, as another one of these malachite occurrences. And we'll be running 2 lines or 3 lines of air core over this simply to see, it needs to be explained. It's a very high tenor. It's the highest tenor copper sample in the entire survey. We need to explain it. And for me right now, the best explanation is exotic malachite. Again, we've picked up one of these paleo channels in the copper geochemistry full of lumps of malachite. And the only way to test that now is going to be to run AC, air core, right over it. And that's exactly what we're going to do. Okay, so I'm going to flick off the Casiba stuff now. Are we done there? Are we happy?
So one more question. Mickey was just asking about the outline. So I can probably answer that the red outline is the property boundary. This black outline in the center, Mickey, is the basement dome. So as Kevin was explaining, Casiba target 2, which is the sulfide target that we're working on, is sitting in the exact right rocks on the outside edge of that dome. But that crosshatched area in the center with the black outline is the dome. And then the big outline on the outside edges is the property boundary. Hopefully that helps. Go for it, Kev.
Yeah, so that's the outline boundary. So I'm just going to dwell a little bit on the VTEM because it's important to our exploration philosophy moving out over the next 9 months up to Q4. So I'm going to take you down south to Me2. You probably already know a bit about Me2. I'm just going to give you a quick review. This is the Rio Tinto VTEM survey. It's multi-channel. Each channel tells you, a slightly different story. But what I like about the late time decay is it's the one channel that seems to have really pulled out sulfides in the data. We know that Me2 is a sulfide mineralized stratigraphic layers actually. We know it's low grade from our previous drilling. We know it's chalcopyrite, bornite, and that's what Me2 looks like in the VTEM. It's a very well constrained stratigraphic true target on the edge of the Solwezi Dome. So you can see the margin of the Solwezi Dome quite nicely here. And going right through the license, in this sort of northwesterly sort of rounded trend. East of this, you're in ancient crystalline basement. On the west of it, southwest of it, you're in younger prospective Katangan rocks for classic Zambian copper belt style mineralization, of which Me2 is a pretty good target, a pretty good example. So the geologist Clever is with me right now, relogged all of the core that we have from Me2. He saw some very good copper intersections, dominantly chalcopyrite with a little bit of bornite. It has developed an oxide cap where it daylights. It's a lot bigger oxide cap than Casiba. It's from where you start seeing oxides to really to where they end is about 1.7 kilometers, and it's about 250, 300 meters wide. As you can see, it's been fairly heavily sampled, mostly using air core again. But I think this is an advanced target for us now. We need to start putting some numbers to Me2, taking it from, an arm waving, to southwest dipping, copper mineralized stratigraphic unit to giving it an actual grade and tonnage. And we're currently planning the program. We're going to RC the oxide cap. It's lower grade, very low grade, 0.1s to 0.5s. Occasionally you see a percent. But in terms of metal budget, quite significant and nearly always above 0.15, which is the first quantum cutoff for their leach plant. So we're above cutoff, but only just. We've got a lot of material at surface, ready to be mined, and then it will pass through a mixed zone of oxide and sulfide, which we know metallurgically is hard work, and then it runs into the sulfide ore body. So the plan will be RC in the oxide cap. Once we start seeing mixed zone material, we'll flick over to diamonds and start drilling northeast orientated diamond holes, probably at a spacing of about 100 meters to begin with. Like I said, Me2 is fairly low grade, but at 100 meters, we can start, at 75% confidence, maybe 60, putting together a resource at Me2. So we like Me2, and Me2 is great because it's a learning center for us. It's a test center for us. It was a pretty good anomaly. I'll show you the copper anomaly from the historical data. This is one of the places where it might have worked. What's exciting about Me2 is in the south, there's more of these very similar response, V10 response, amplitude anomalies in the right geological environment on the edge of the dome in the Katangan. There's a very nice one here. You can see it's been barely tested. It wasn't much of a geochemical anomaly in the past. And again, that doesn't faze me because I know the geochemistry wasn't particularly well done. In between on the contact, you're still seeing a few flicks of oxide here and there in some of the old data. And then finally, way down in the south, we've got this nice looking stratigraphic target here. We've got this contact here, minimally tested, and the one in the south's not been touched at all. No soils, no drilling. So there's a lot of work to be done at Me2 outside of actually drilling out Me2 itself. I guess at some point we're going to have to give these anomalies names. So I like that one. I like that one. I think by the time you're out here west, you are in quite deep basin now. I think that's when you're starting to see black shales and carbonaceous shales of the Kundalungu. They're very unlikely to be copper mineralized. You're seeing poritic shales there, but on the contact is where you need to be looking for copper, and that's where our focus is going to be. So we've designed, and in a maximum of a couple of weeks, we'll be mobilizing the team to go and execute this survey here. We are going to run partial leach, partial ionic leach, again, because I have grave concerns about our lack of knowledge of the regolith, and partial leach isn't as sensitive to regolith as conventional is. It's more expensive. And we are going to test the full extent of the prospective basement contact, at least where we have it inside our license. We've got a couple of lines going through Me2. It'd be very interesting to see what the partial ionic leach response is there and how we can apply it to some of the other targets. Of course, we're testing, these V10 anomalies as well. And then finally, carrying on down south, and hopefully we should pick up some nice stratigraphic true copper anomalies, maybe other metals as well, or associations to give us leads into more opportunity on the Solwezi Dome margin. That's that program in a nutshell. That's the drilling at Me2 and the upcoming partial leach program, which has worked so well at Kasiba. No reason to suspect it won't work equally as well here. The whole program, without the drilling, was still costing the drilling. The partial leach is going to come in at about $100,000. The sampling time is about a month, and then about a 3-week to 4-week turnaround time. We'll get the results back, I'll interpret them, and we'll be ready to have, hopefully, another very exciting meeting about the results. Any questions? No?
Yeah, Kevin, I've got one.
Sure.
This is Brent. Um, the deal with First Quantum on the oxide, it's sort of nebulous. Nothing's been signed. What's the holdup on that?
I'm going to pass you to Adrian. That's a level I don't deal with. I just find the stuff and prove it exists. Adrian, jump in, please.
For sure. Two phases, Brent. So the goal is let's go out and find this material and put a number to it before we actually sign the formal mining agreement. So that part's still in progress and still very clearly in play. There's no question in our mind. First Quantum needs the material. First Quantum wants the material. That's all marching forward. We spent a lot of time with them over the last month or so. But our decision is to get the drilling finished at those two targets and show them what we're dealing with so we have an actual number to negotiate around. Comfortable with the handshake agreement we have and what they need, but they need this material. They need it as quickly as they can get it. So there's not really much time to waste, and they need to lock down future feed for their SXEW circuit, and this is the only source they have. So they're in a position to need it. We're in a position to deliver that material, but let's let Kevin put some numbers to it before we sign any agreements. I think that's the smartest thing we can do.
But they have
All right, great.
They have a relatively strong hand, right? Because they have I mean, they need it, but they have the capacity and so forth all set up, and probably nobody else is as convenient as them for doing a deal like this. So the question that comes to mind there, just as an addendum to what you said, is what do you think the number would be that would get them to sign a deal?
Well, I think it's more about getting us to sign it off. I mean, at the end of the day, we can't understate how important this material is, Ed, to them, into their operation. They can't stockpile acid. They can't ship acid out, and there's no local market for it. So they just opened up a 35-year sulfide lens. They're going to be, their smelter is going to be running full steam ahead for the next 30 years. They need to get rid of that acid, and this oxide material is totally crucial to that plan. So that's where the confidence comes from, and they've made that very clear. They're not beating around the bush. They know that they need this material. For us, we've had a sort of an agreement at about a 30% handshake on what our share of this would be. And that hasn't changed. That hasn't shaken. We feel pretty confident that it's going to be in that range. But the point for us is that we don't want to be in a position to mine it. We don't want to mine it. We don't want to have to tackle those things. They're not our strong suit. So we want a situation where First Quantum can take the reins right from permitting all the way through. They can do the job. They can come and get the material and take it away. The haul road runs right through the middle of our property. This is as easy as it gets. And it is very much free mining. So super simple, very straightforward. But, the agreement is going to be that we'll take a minority position of cash flow, but not get involved in the mining process. And that's what we're aiming towards. So at the end of this, what does First Quantum do? Do they end up writing an offer to take the whole thing or all of the oxides? I mean, maybe. That's certainly a potential, but we wanted to split this into two phases where we do the work before we get into that formal mining agreement, as opposed to doing it too early. And as Brent and I were just talking about a moment ago, I think the smartest thing we can do is put a number to these oxides, figure out how big they are and how high grade they are. They're far higher grade after that first round of confirmatory drilling that Kevin carried out than we thought they were going to be going in. So it's in our best interest to make sure we know what we're dealing with before we sign the rates away, and make sure we know.
And what's the timeline on that drilling exactly?
Very, very quick. I mean, the turnaround on this is quick, not only because the work Kevin's doing. Got to remember, these are 40-meter oxide RC holes. They're 40 meters max depth. They're vertical. They're quick. They're easy. And then all the assaying and met work is being done at Kansanshi. So this is very, very quick work and very inexpensive. And so right now he's got 18 holes, I think, spotted at Kaziba on the oxide blanket, and then additional holes on those 3 new oxide targets that we also have that we hope can add even more tonnage into the mix on this whole plan with First Quantum.
And just one more question on Me Too. Are you are you aiming at a resource calculation there?
Yes.
Did you say? Yeah. And is that going to be just based on RC, or are you going to have some core holes in?
No, just to go back to it again, we're going to do RC in the oxide blanket. And then once we start seeing the mix zone, as we go deeper, as we come off the dome and into the Katangan, we will switch over to diamond. So it's RC for the oxides, diamond for the sulfides. Plus, structurally, it's quite complex. Like I said, we've just completed relogging what historical core is available. It's not all there, but enough for us to start building sections. Clever Kahilu, my geologist, is in my office with me right now. He's just managed to get his leap working again, and we're starting to build. We're starting with the bedrock interface surface. Then we're going to do the mineralized M-flow at Kasiba, which should show quite nicely that it's open towards the northeast. So that's the next step there. And then Me Too, we've already got some sections through Me Too. There was a lot of problems with the historical logging. Again, multiple generations of geologists. One man's silty sandstone is another man's sandy siltstone. We had to do a lot of work to get some consistency into the logs and start actually joining units together, the mineralized lenses, and we're pretty advanced with that now. So really, the resource drill out at Me Too is going to be just adding a lot of flesh onto a skeleton that's barely clothed right now. But the ultimate goal there is a resource statement, even at 100-meter spacing.
Kevin, do you have any sections from the drilling on the oxide copper target at Kasiba? It seems like you've got 54 holes there right now. Do you? And some high grade hits as well. And I'm curious as to how those relate to the lower grade hits.
Okay, those are with our consulting resource geologist. He hasn't completed with those yet. He says he'll have them done by the end of the week. I'll fire them to Adrian, and Adrian can distribute them. So on my word, you can have a look at some sections by the end of the week.
Okay.
I think the envelope is more important. The thickness and the grade. It's going to be like almost like what can I say? I'm trying to like a UFO saucer shaped thing. That's what we're seeing when we look at it right now. But we don't really have them ready for release yet. But we will very shortly.
Okay. So I have a question regarding the property boundary, and it appears that most of the anomalies trend on partially on your ground, trend onto others' ground. Does First Quantum control all the adjoining ground, or are there other parties involved?
I mean, the ground holders surrounding us, none of them are major companies. They're all local businessmen. There's no restriction on owning ground in Zambia. You don't have to demonstrate technical or financial ability to run a mineral license. And I certainly think, staring into my crystal ball, that one of the things we're going to start doing fairly soon is engaging with our neighbors, where we feel some of our targets are running into their licenses. And I don't mean going in there and saying, hey, you know what, we think you've got a big copper deposit in your license. We're not going to approach it like that. We're certainly going to say to them, are you interested in doing a deal? We're interested in doing some exploration on your license. So the simple short answer to your question is there's nothing stopping anybody from having that conversation with our neighbors. But we're trying to make sure we get first mover advantage.
Okay.
And of course, I mean, at the moment, First Quantum don't have access to what I'm showing you. We've not taken First Quantum through this. The focus has been purely on Kasiba, and you're right to recognize that Kasiba looks like it runs southwards, and it probably does. But I mean, it's easy. It's not that difficult to find out who owns that patch of ground and talk to them.
Is that covered off for you, Mickey?
Yeah.
Yeah. Awesome. Okay.
All right, so I'm going to flick over to Dumbwa. I changed the V10 channel to reduce the pole because it does show the fantastic north-south kind of lineaments running through the ancient basement rocks, and that's key to understanding what Dumbwa possibly is. I spent my time at Barrick on Lubwe and Chimiwungu and Malundwe, and this is just another one. They're brothers from the same mother. They all strike north-south. They all contain well sulfide mineralized 2 mica schists, which were originally deformation zones during the Lithilian orogeny. The little bit of dating that's been done at Lumwana has given us 535 million years, which puts it firmly in the Lithilian. So this is really where the circulating brines were penetrating the domes along active deformation. When you look at the core, when you get into the pit at Lumwana, you can see boudins, you can see organs, and in the pressure shadows around the organs, you get the copper mineralization. It was a strain-related deposit, I think, more than it was a reductant-driven deposit, which makes it different to everything else in the copper belt when you get into these basement rocks. But, Lubwe north-south, Dumbwa north-south. Lubwe dips 15 degree east, Dumbwa dips 15 degree east. Lubwe is a 2 mica schist, Dumbwa is a 2 mica schist. They're both marlonites. They're both mineralized with mostly chalcopyrite, with a bit of bornite, more bornite at Dumbwa than at Lubwe. But Lubwe is a little bit different in that Lubwe is associated with a lot of pyrrhotite. At Dumbwa, we see pyrite as the main associated a non-economic sulfide phase. So Dumbwa is a very, very long soil anomaly, as you probably know. I was very, very pleased to get this back from Cobalt. I didn't like their exploration approach because I think they were just going to make the mistakes of everybody that's tried to drill this in the past. And it hasn't been drilled much. It's been drilled enough that we can tie IP to mineralization. I'd be happy with that. These sulfides are the only things that are going to charge in an otherwise barren, gray and pink nice package. And I don't think the VTEM is particularly outlining the ore body at Dumbwa, but this drilling was done without this data. I mean, it really was blind drilling, and almost every hole has some sort of copper in it. I've walked over Dumbwa. I've taken a few surface samples of oxidized schist and run them through the Lumwana ICP, and we were getting between 1.3 and 3% copper, although probably refractory because there's no color. So I suspect it's gone into the silicate phase. So we know that Dumbwa is a massive soil anomaly. We know the soil anomaly can be tied to bedrock copper mineralization. What we don't know about Dumbwa and what we do need to know about Dumbwa is the geometry. We really don't know. We think from the previous drilling that the dip is 15. It may vary. I mean, certainly the Rio Tinto, when they drilled further to the south, First Quantum, when they drilled further to the south, that's outside the license. They were angling their holes at 85 degrees, 80 degrees west, which does tell you it's probably a 15 to 20 degree dip east. So the approach I wanted to take, which Cobalt weren't going to take, Cobalt were just going to go drill mad, is to run IP along the whole line of the anomaly. Nail down the precise location of the chargeable zone in the barren gneiss package. And that means we now have targeted drilling instead of guesswork drilling. And then it'll be a case of stringing together the chargeable zone. I know we're going to see it, the low resistivity coincidence under the soil anomaly, and we can actually poke some holes in. And I think in the case of Dumbwa, because of the upside potential is really big, we'll probably go straight in from diamond from day one. It's going to be complex. They're myelinites. They cut through the banding, the gneissic banding. They move around. There's more than one of them. It's a multiple stack system. And I think RC is not going to give us, it'll give us the or no or answer, but it's not going to help us understand Dumbwa. And understanding the ore body, I think, is going to be critical to turning Dumbwa from a converting Dumbwa from an advanced target. In my opinion, it's an advanced target. It's not greenfields, to actually having some defensible numbers in terms of its grade and tonnage potential. We know it daylights. Again, the cover up there is pretty thin. It's only a few meters thick, and occasionally a shallow sort of digging will expose the mineralized schist. There's a lot of mapping work to be done. See if we can actually pick up the schist in mapping. My geologist here is looking at me thinking he's got a lot of walking ahead of him over the next couple of months. But I think the IP program is the next logical step that will help us understand the geometry, which in turn will help guide our drill program towards Q3, beginning of Q4, I suspect, maybe quicker. That's Dumbwa in a nutshell.
That was awesome, Kev. Thanks.
Any
So,
questions?
yeah, I mean, let's throw it open to questions. Hopefully, obviously, I know everybody is looking for sections and details and stuff, and I think Kevin's showing you a lot more than you're probably expecting to see. This is a full deep dive at this point, and you guys are getting a really, really good look at what we're tackling. This target's spectacular. Everybody zeroed in on it for the same reasons. The analog to Lumwana is striking, and you're getting that straight from the horse's mouth. Kevin's a guy with his team that unraveled it, so he sees the same stuff that got him excited over there. But this is going to be unreal. I mean, we've been waiting 10 years, or our team has been waiting 10 years to really see what Dumbwa's made of, and now we're going to find out. So it's exciting times. Any questions from anyone on the call on this stuff?
So while you're thinking of your questions, I've just flicked up one last map from the leveling program I did with the historical geochemistry, which wasn't easy. Me2 comes through as a really, really, really strong target, copper target. Just to flick that off so you can see, I'll put the V10 back on, so you know exactly where you are spatially. Me2 comes through as a very strong target, as you can see in the old copper data. But the interesting thing is another target down here in the southeast, which is coincident with those VTEM anomalies I showed you that I really liked. And there is a little bit of AC drilling down there where they did pick up an oxide cap, but no diamonds, no deep drilling, no real effort to understand it. That's a very, very, very nice anomaly down there. And again, it's in the right place. It's in the lower Rhone dome contact, another very nice target. No sampling down here. This is the partial leach plan that you're seeing here. And the historical sampling basically stops here. So this entire contact is untested. And I think the partial leach, if there's something there, the partial leach will pick it up and give us even more to look at. But anyway, guys, that was just for interest's sake, that the work has been done. I'm happy to field any questions. Over to you.
So what would, Kevin, what would be the time? So where would that fit in the timeline? So Kaziba first?
I think Kaziba target 2 is the priority right now. And Dumba, of course, like I said, Dumba's only just landed back with us, literally in the last 3-4 weeks, Adrian. I suppose.
Three and a half weeks, something like that.
And I've just come back from 12 days fishing and snowboarding in Norway, so I've not been on this for a few days. But look, I mean, the IP program can happen in the next month. I don't think we need this density of lines. I think a kilometer spacing will be enough. We're looking at something really big. We're not looking at something small. If we can string it together at a kilometer spacing, great, and it halves the cost of the program. I mean, that program, you're looking upwards of $150,000 to $250,000 for a hybrid gradient and dipole program. We need the gradient to show us where it is in plan view. We need the dipole to start getting some 3D solutions on dip and depth to the chargeable units. So, we literally just finished the design. I'm going to get onto our local IP provider in the next day or two, start putting some quotes together. And I think that'll be the next big thing from us. Sorry, my email's flying here. That'll be the next big thing for us, will be the IP results from the Dumbwa opportunity. Me2's a drill out, the partial leach results. Again, you're probably looking at about a 2-month turnaround. We are mobilizing in the next week or two. And the key.
Mobilizing for Kaziba or Me2?
Both.
Both, okay.
Both.
Right.
Trying to find rigs.
Right.
Yeah, just trying to find rigs right now. There's a rig shortage in Zambia.
Okay, so you might not even get around to drilling Dumbwa this year, right? Or
we'll drill.
No, I think we will.
Yeah,
I think we will. But I'm not drilling Dumbwa until I understand it better. I'm not going to sign off on that until I've got the IP, until I know the geometry of the ore body. I mean, if you held a gun to my head, Ed, I would say, no, I'm not being ambitious or over optimistic if I say that I would expect the rig to start turning late August, early September on Dumbwa. Maybe quicker, but we've got a hell of a lot of work to get through in the next 3 quarters of the year. But definitely we need Dumbwa's our prize. It's not our only prize. I think it's our largest tonnage opportunity. It's low grade. It's like Lubwe. It's going to be very similar to the way I suspect in terms of grade and tonnage, and only drilling will demonstrate that. So yeah, I mean, if the rig's turning by August, I'd be the happiest geologist in Zambia. But first, we really need to hit this hard. I do like target 2 as a new target.
And
just
of course, just to jump in and make it really clear, but drilling on the other targets shortly. So we'll do lots of drilling in the meantime.
And there's one target that sort of has dropped off the radar, I think, the crunch target. Is there any follow-up on that?
The crunch is this area here. We had a couple of holes drilled in it historically. Unfortunately, the core for that is no longer available, but it did have some copper grades in it. It's one I will eventually get around to looking at. I mean, that's not a very good. Definitely got conductors. It's in deep stratigraphy. It's in the Gundalungu. But if you look at the residual, you look how complicated the geology is there. I mean, that's a power line running through. You can ignore that. So we know there's something going on at Crunch. We don't understand it. I'm not going to lie to you and pretend I understand things when I don't. It's really, really complex structurally and geologically. It's going to be a hard story to tell. It's kind of in the back of my mind, but right now I'm focused on the low-hanging fruit and working my way up the tree. So I think Crunch is something we probably won't get around to looking at until 2026, if I'm being honest. If I get the time, I'll have a close look. But honestly, this is tree climbing, and this one's right at the top of the tree.
Cool. Okay, thanks.
Okay, gents.
Any other questions, guys?
Yeah, Kevin, can you tell us or show us the Dumbwa soil anomaly without
sure.
the VTEM layer?
Yeah,
Or show us what those soil outlines.
Yep, I can. I'll need to mess around a little bit.
Yep.
Turn that off, and I'll turn off the copper off to the west. I'm separating that out. Shut that off. Dumbwa. So you're going to have to be a little bit patient.
No problem. I was just curious what those outlines might represent.
Oh, it's really, really nice.
Or if you can show the anomaly.
Yeah, it's worth spending a little bit of time on. So, okay, all right. I was mucking around with the data a little bit. This is the Dumbwa anomaly. Now, you will recall I said to you anything over 250 ppm is interesting, in the copper belt, and Kasiba came in at 249. I mean, it was right on the margin. All these red dots are 1,000 ppm or more. And the highest soil sample we got from this survey was actually 307,000 ppm copper. So that's what the anomaly looks at the absolute 99th percentile from all of the sampling that was done. And you can see it was blanketed. But again, I don't believe a lot of these geochem results. We could go back and do partial leach over this. I would argue it's unnecessary. We don't need more geochem over Dumbwa. We need IP. But that's basically what the anomaly looks like. So what I can do very quickly, if you'll indulge me, is I can change these thresholds around a little bit. So I can make that 550 to 1,000. I'll just pop that in as yellow. And you see it sort of growing outwards. And I think I'll make them bigger. So this is why I prefer GIS to PowerPoint. So now you're really starting to see, the anomaly come together. And I'll color the 500 ppm contour as well. So there's a lot I can do with this data. And again, it grows out a little bit more. And if you take it from 63 to 250, you remember I said that 250 is when things start getting interesting. Just switch that to 250. So 250 can stay black. And you will see the shell really starting to fill up, particularly down here, but also up here and going on up to the north. And then it gets kind of affected by drainage, but still significant numbers on that sort of, rule of thumb. There's no scientific basis for it really. 250 ppm, and that's when you really start seeing the anomaly. Now, another striking thing, if you like this sort of thing, Brian, is if you pop on the satellite imagery, you've heard about the famous copper belt copper clearance. where copper toxicity suppresses plant growth, and you even get the famous Rhodesian copper flower. If you put Bing on, it's a damn near perfect copper clearing. That's not drainage. Plants can't grow there. That's how high the copper is in the soil over Dunbar.
Interesting.
It is. I fell off my chair when I plotted this. I thought that was just amazing. So, like I said, this is everything above 250 ppm. You know, again, the historical geochem, partly RST, partly Shandong mining, first generation PXRF. I don't think it's particularly reliable. I mean, I might run some partial leach where there's gaps, and especially when it's getting a bit sparse up here. These are quite wide space samples, and some are missing, and you know, the whole database was a little bit of a mess. But yeah, there you go. That's kind of drainage there, so I wouldn't believe those, but they're still pretty good. And then you run up into this area here, and you know, you've got all these very high grade copper anomalies. It's pretty interesting.
And what kind of scale are we looking at here again?
From south to north, if we these two, I think, are the more important ones. Everything seems to fade away a bit towards the north, although there's still something going on up there. So if we just take these bottom two polygons, that's about, well, 11.5 kilometers. But going around the anomaly, yeah, so about 12 kilometers.
Okay.
Big.
Good.
There you go. Okay.
Kevin, I'm just curious, can you just re-elaborate a little bit on when you said that most people would drill it, the Dunbar differently than you would, or would look at it differently than you?
Well, I mean, what I mean is the drilling that was done at Dunbar, there was no plan behind it. It was just scout drilling, wildcat drilling, I think the Americans call it. I mean, they didn't have any IP, they didn't have V10. The last time Dunbar was drilled was by us, by Midnight Sun in, I think, 2017, 2018. And again, I mean, it was you know, it was more citing the column using your thumb rather than actually saying, look, we're going to hit something at 120 meters that's dipping 15 degrees east and striking north-south. It was guesswork on the drilling. And you can see, actually, in occasions, they did actually drill in the wrong place, or they didn't drill deep enough. I mean, if that area of red dots, which incidentally is where I picked up a schist, mineralized schist, why would they drill it all the way out here? And I mean, they went down to 73 meters, and let me turn Bing off a minute. I can't read my own writing. And they got a meter at 0.68. But I mean, if that's 15 degrees dip, by the time you're out here, you're down at about 150, 200 meters. I mean, that's 340 meters away.
Right.
So, you know, I mean, that's just guesswork. It's just guesswork. Why didn't they drill here? I don't know. I can't answer that question. I can't defend this drill program.
Yeah.
But what I can do is use the IP to come up with a drill program which I can defend and which will get us intercepts. So I'm particularly keen on the low strip side of this. We know it comes up to surface. We know it daylights along virtually its entire length. It is under some cover, but like I said, it's not very thick cover, which is probably why geochemistry has worked so well here. And it's a good example of conventional geochemistry actually working for once in subtropical soil. But I think with the IP, we're going to have beautiful pseudo sections, and we're going to be able to plan a proper constrained draw program. That's my goal here.
Right. So they didn't hypothesize a dip.
I don't think so. Again, over here, SD7, SD8. I don't have the assay results for these, unfortunately. This is first quantum drilling from the late 2000s. I have the assays up to hole 5, and I'm missing 6, 7, 8, and 9. They drilled them all the way out here. Why didn't they drill in here? I don't understand. SD009, I mean, that at least that's more or less in the right place. But sadly, I don't have the assays. I would have drilled over here. If I was wildcat drilling, this is where I would have put the results. But it is possible they didn't have the results, the historical results. I don't know. I can't really make much sense out of the previous drilling. It's certainly not enough to put me off.
Interesting.
Yeah. So 180 meters, 0.3. These have no intercepts in them. Again, there's no supporting geochem. Maybe the schists have thinned a bit. It's coming through here. I don't know. I just know it can be done better than that.
Thank you.
Any more questions, gents?
Yeah, pretty easy to see why your strategy for IP is so valuable, Kev. Like, tie the thing together before you go popping holes in it. Why would you just randomly drill holes all over the place? Seems
absolutely.
money.
And also, I've got to be conscious of not breaking the bank here, Adrian. You know,
Yeah.
we might go at this at a kilometre spacing and half the cost, because you know, every cent I can save on geochemical sampling and IP, I can plow into drilling, and,
For sure.
I'd rather drill, but I'd rather drill when I know I'm going to hit something.
Yeah. Well, and we're not too worried on the funding front. We've got that kind of covered at this point, I think, for
I know, but that
we'll
doesn't
keep
excuse me.
funded doing a good job.
That doesn't excuse me putting together a $3 million IP program, does it?
Never know. If it'll get us where we need to go, let's do it. Anyways.
Okay, gentlemen, is that enough? It's getting late at night here, and I'm about ready to toddle off, I think. But while you've got me, any last questions?
All good. Excellent. Well, I'm glad we could do this. Thanks everyone for yeah, totally. Byron just said it's all about de-risking before you spend big dollars, and that is exactly the name of the game. You nailed that.
Yeah.
That's it.
Yeah.
Excellent. Well, thanks to everybody for joining us again. I'm glad we could do the follow-up, and Matt and Doug, you know, huge thanks for putting together this second round. It's nice to get Kevin on here to actually explain this in technical terms, but as I said, we could create graphics, and we will. We're going to follow up with all those sections and everything we've talked about. But to see what Kevin just put you through, I mean, literally, you know, lift the curtain, take you right into his program that he's using to plot all this out, and you just got to see everything we're working on, and it's really, really impressive. So hopefully that was helpful and gave you everything you were looking for.
I'll just put my video on so you know I don't have two heads.
There you go.
Oh, that was great, Adrian. Obviously, I'll leave it to the experts here to know whether or not all your questions were answered, but it seems like we're done at this point. So thank you. I really appreciate it. And I think it was, you know, it was the questions. It was like there was information that wasn't revealed for a reason. As the vibe as a non-expert, I'd say I felt in the last presentation.
Okay.
You know, and I think just being more transparent with some of the specific drill results in the past. I mean, as Kevin did in such detail, it paints a very clear picture for everyone, I think.
For sure. Well, and I think the other side of it is looking at time constraints around how to present this story. This story is extremely complex in terms of the nuance, the different facets. We've got Kaziba, we've got Me Too, we have Dumbwa. Each of these is a company maker target. These are big, spectacular targets that can be dome-style deposits, and then you still have the oxide aspect on top of that. So trying to condense that into let's call it a 20-minute presentation, you can see why it's presented the way that it is, where we have to focus on the overview, bigger targets, why we're going there, what we're going to do, how we're going to attack it. But when you get into the nuance and Kevin's geological approach, it's so well thought through, and you can see the level of detail and what drew both Kevin through Barrick and Dave Broughton through Kobold and the other groups that we have in the mix now. I mean, there is a lot to go on here and a lot of detail and targets that are frankly top notch. I mean, Dumbwa is definitely a tier 1 exploration target. But the work I think that's surprising to me is what he's done at Me Too and strung Me Too into. Me Too is one hell of a target as well. And then now, of course, with Kaziba having a sulfide or what seems like a sulfide source, the story keeps building and growing. So it becomes a bit complex to get it boiled down into a simplistic form to be able to tell it. But that's why these follow-up sessions are so valuable. But I do agree. I mean, now that we have Kevin back in the saddle and we're developing our plan, we can develop graphics that properly represent the technical side too, so people can dive in a little bit deeper. And we'll be doing that.
Okay. All right. Well, we got a little long again, but thank everybody for their time. Really appreciate it.
Adrian,
Adrian, you all.
Yes.
Can I ask a couple more questions, Matt?
Yeah. Are they technical questions or?
Not really.
So just say drop off. Don't feel bad about leaving as we're way over anyway. So, but go ahead, Ed.
I just wanted to ask Adrian about about the remuneration for Kevin is what are you paying him, and what option package is he getting, and stuff like that?
That's a really good question. I have to be honest with you, I'm not even personally privy to it. So I'm not sure what the agreement is that Kevin's under and his contract. And I don't know if he's comfortable sharing or how he feels, but is Kev, are you still there? Did you go?
Yeah, no, I'm still here. I'm employed 50% because I'm a consultant as well. I have other clients. So I'm employed 50% with Midnight Sun. I do have some options, I think, were granted to me when I joined. I haven't exercised them. And the salary is about $10,000 a month. So that's it basically.
And Kevin, one more question while I got you there. What do you think that the resource target would be, conservative wise, at Me Too?
Look, Me Too, I don't think it's going to be massive tonnage. I mean, it's probably 1.5 kilometers wide, going down 100 meters. I mean, you're up in the 15 to 20 million ton range. You know,
Right.
I mean, your target grade there would be 1 to 1.5%, and I think it flies. At 1%, it's walking, and at 0.5%, it's crawling. I mean, there's a good oxide there, again, in the 0.1 to 0.3 range. That would probably, you'd be looking at maybe 5-6 million tons of oxide, quickly and easily available. The sulfides, I'm not so certain. We've only really just built the sections, so it's not a tier 1, definitely not. It's a half decent tier 2 opportunity. There's a little bit of cobalt on there as well. I don't do copper equivalent. I think copper equivalent is voodoo. It's black magic. It doesn't work. So I prefer to deal in copper numbers. So yeah, I mean, it's an advanced target with, you know, maybe 20 million tons, percent 1.2 on the absolute upside. So a decent amount of contained copper, good metal budget, and not expensive mining. I mean, the oxides are easy to get out; they're very shallow, and then it depends how far down you want to take the pit. You know, into the sulfide mineralized stratigraphy.
Sure. Okay. All right. Super. Thanks. Sorry for keeping you.
No problem. Cheers, Claire. See you tomorrow.
Yeah.
Sorry, my geologist is knocking off.
Thank you.
Thanks all.
All right, guys. Stay well, and pleasure to meet you all. Have a great day.
Too, Kevin. Take care.
Okay. Thanks, everybody.